Good morning.
Welcome, everyone. How are you all doing? Welcome to the live stream. Hey, Mike, good to see you.
Good to see you, Anastasiia. How are you?
Yeah, doing good. Doing
Yeah?
good. Thank you. Actually, yeah, after yesterday's FOMC meeting, the market seems to be finally good, which I didn't really like it for the past couple of weeks, to be honest with you. Didn't see my edge. And now today's is supposed to be a really great day, actually, looking at how it is right now.
Are you not? Do you not think though that the fact that the US is closed today might just dampen that mood a little bit?
Maybe, but for the current moment, being is good. It's good. And even though like tomorrow is gonna continue, I'm gonna hold probably the trades over their closure. So
yeah, fair enough. Fair enough.
You know, you are a more intra-week trader. I can hold those.
Yeah, I don't have that patience. I don't have that patience. Talking about intraday and talking about grabbing those trades, I think it's only fair that we start looking at gold because those of you that don't know, Anastasiia in the background has been teasing me since yesterday when I said go long on gold yesterday on stream, and the long worked out. Right. And I would like to point out that Nora was here. I think Amal was here. Several people were here for this. Right. And they all pointed out when I said go long on gold, the longs went. Now, I want to caveat that by saying that gold didn't go like $100, dollars sky high and rocket, but it did make a $20 move. And $20 in gold is a decent move. So I'm just pointing that out. I just want to it doesn't need any further discussion. I just want to.
No. I think it needs the discussion, guys. Can we vote in the chat, please? Does it look like a bearish market since yesterday or the bullish market? Because I had those levels marked up. Look at this. No, look at this, Mike. I want to point out this. Look at how beautiful those two levels worked out. Like, look, it was almost like I had the crystal ball, and the price went down.
It did, but before it did that, it did that, it went up. See, look, Amal is on my side. Amal is saying this is, look, there you go. They're all agreeing with me here, right? So, took a gold buy in the 50s an hour ago, says Cam. Nice one, Cam. Profit is profit. Exactly. Thank you, Vinicius. Thank you. So,
Omar is saying, don't try.
Omar's just, he's just, I don't know. I don't know Omar. Omar, you weren't even here yesterday. I didn't see you in the chat yesterday. So there was a move on gold. It bounced off the levels that the zones that I marked out. Granted, it did then sell off, but the push off that I was suggesting would happen did indeed happen. That's all I'm saying. All I'm saying is that the push off happened, and it would have been a nice trade. So,
but I still stay by my opinion. I don't trade this kind of things because the longer the price consolidates, the higher is the chance of the breakout, and you never know when the price is going to break out. So the buy could have even turned out into this immediately. And you were just lucky that FOMC was in the evening and you were trading this in the morning while the range was...
That's why I was doing it. But that's why I was doing it, you see.
It is strategy.
This is intraday trading. This isn't like, long-term holding. Oh, I haven't got time for that. I'm too busy. Venetia says, I understand you. Sometimes my positions run in drawdown too, but what matter is the result after closing the position. Exactly. And Nora's saying, I took a long this morning on gold when it came close to my zone at 33.45. Yeah, it's gold is in a funny zone right now. Actually, I feel as though we may have reached the. There might be a little bit more of a push up, out to kind of 372, 375 area, on the CFDs. But I do think we're still short. So yeah. Do you know what, Vinicius? I think that's I don't think that's true. I think Anastasiia very much appreciates the adrenaline and heart pumping. She just doesn't like it in her trading. That's all it is. So so there you go.
That is
So
that is true. I'm trying to my love with adrenaline, so I don't need to transfer it to trading. And this is actually a really good topic. I know myself. I know that I should never go to casino because I'm extremely competitive. I do not like losing, and I need adrenaline in my life. So if I wouldn't have like my life full of different crazy things, then I would transfer it into trading, and my trading would not. So you need to know your weaknesses, like I said before, and I know mine. So I'm trying to, direct it towards something else.
So in other words, what Anastasiia is saying is that if you want to find her when she's not trading, you'll either find her bungee jumping, skydiving, or doing roller coasters or some other crazy wild things to get that adrenaline fix. So that by the time she comes to the markets, it's like, oh, okay, all right, I've got the patience. Okay, I can trade. Okay, all right. That's what you're saying, right?
I do have my skydiving license, actually. Yeah.
See, there you go. Yeah. I didn't even know this about you, but somehow there was just something about you that told me, yeah, okay, she's probably skydiving. Yeah, okay, all right.
It's been a while, but I should bring it back, actually.
Oh, okay, all right. Well, next thing we know, guys, she'll be having hot air balloon licenses and pilot licenses if she doesn't already have them.
Pilot license is great. I was just looking into this. It costs from 20 to 70K, and then you can fly anywhere you want. You just jump in the plane. How cool is that? I mean, this is what you work for,
This is what you work for, guys, is to go get your pilot's license. Go get your pilot's license. Oh, cool. Dear. Good to see you, my man, Akram. Hope you are well. Helicopter go brr. Exactly. DJ's agreeing with me on the gold bias as well. Thank you, DJ. So yeah, no, I think we are at a nice level right now on gold. It's just it's stalled a little bit. It's just kind of sitting at that area, which was previously support, where we dropped down yesterday after the FOMC news. So we're just kind of consolidating a little bit on the lower time frames again. It's a question of whether it wants to come just that little bit higher into this zone here. Like I say, the kind of the 372, the 375 area. The fib that I've got marked out here is just from the top of that move down from this morning all the way down to the bottom, which broke the previous structure that we had formed here. And we're at that 50 level. So we know that the 50 level can hold. It doesn't always necessarily hold. Sometimes it wants to pull back. And as you can see, 6180 is then at this cluster here. So currently I'm waiting to see what plays out. It's there you go. It's not ready to sell yet. So I would say we're probably now looking maybe at this area here. I think is our next area that I'd be looking for sells. Somewhere in this region would be a nice area for sells. That would be a potential sell opportunity, depending on how we react in that zone, if and when we get there. It's a nice little, as you can see, we've got 1, 2, 3 peaks on the 1 minute. So a nice little area for us to go and target. The reason price is coming for it, if we have a look, let's just see. It is one level there, another level there, I believe. Yep. There you go. It's already come and taken them, I think. Has it? No, it hasn't, not yet. But it's coming for those two because those are wickless candles, and so price just shot down on those, and price will come and retake those to create some equilibrium again before then hopefully selling off for more sells. Are you still short gold, Anastasiia?
No. I'm out of gold right now. Cool. I'm going to share my screen.
Oh, okay. All right. Okay. But your general bias on gold is
bullish.
I just feel like she's doing this on purpose, just to grate me. Do you know what I'm going to do? I'm going to bring this up. guys. It's the strength falls. All right, I can fight fire with fire here. All right, I can fight fire with fire. You want to go against my bias? That's fine. I can bring the strength scores. Right now we've got CHF and New Zealand dollar as a divergence, along with the Aussie. Yesterday, the Aussie and CHF again showed a lot of divergence. So, not saying that this is a trade of CHF continuing to be strong or Aussie continuing to be strong or anything else, but let's just have a look, just for argument's sake, Aussie Swiss, and see if there's maybe going to be an opportunity for something. Right now, sure enough, we are coming back to this support level. So we've already broken these highs. So could we maybe see a resistance, a support level here and see price push up from there? It's a possibility. Now, would anyone have looked at Aussie dollar CHF yesterday or today? No, because as LJ said yesterday, it's a non-existent forex pair, which I think is unfair on the Swiss franc and the Aussie dollar. But anyway, when he goes skiing, he's going to want those Swiss francs, so there will be some exchanges happening. But yeah, this, I mean, there's movement in there. It can't be denied. So there may well be an opportunity on there. We'll see. We'll see how it plays out. Aussie CHF sold off hard. It did, but actually the move itself was still valid, Amal. If you look, I think Jonatan's stop take profit was somewhere up here anyway. So it was FOMC that ticked us down, and then we pushed back up. At the moment, it does look very, very bearish right now, at least on those lower 15-minute time frames. We go out to the hourly. I think we're in a nice area where we may see a wick back up. The next 10 minutes or so on this 1 hour candle is going to be, I think, pretty key as to whether or not this 1 hour candle, which was the Fed rate decision candle, whether that is going to hold or not as support. So we'll see how that one plays out. But yeah, dollar Swiss franc, it certainly did make that move up higher that we were talking about yesterday. But last couple of hours, it has really, really sold off. Somebody was looking at GU. So let's pull up GU. GU has come down, taken this level here. It does look like it might be a nice area for longs. I'm not sure how long it's going to hold though. I don't think we're going to see a massive pump from here. I think that we're likely going to see some further weakness in GU before we then start seeing some strength coming in to into things like GU and EU. We were talking about it earlier on the ABL stream, and that's just the kind of the sense I get. But we will see. Tech Tide, check Euro USD. Let's have a look. Euro USD, yeah, it looks decent for buys. Again, not sure how far you're going to get though. I'd be cautious because you've still got this area here that it hasn't really done much. We've got to remember that today the US is closed, so you've got to be careful. But TechTide, if you want to share your thoughts share your ideas on trades, that's fine. But rather than just posting GU entry now or what have you, give us a bit more context and then we can look at it right now. Okay, what is your GU entry right now? Because I'm not clear exactly on what it is, because all I can see is major levels of liquidity down here, down here, down here. So yeah, give us a bit more context as to what you're looking at, and then we can happily look at those entries. But just telling us enter now, is that a scalp? Is it a swing? Is it a long? Very hard for us to know without further context. So yeah, Amal saying he took a long from 33,844. 33,844. That looks like a very, very nice trade. Hang on a second. That you've been holding that for a while then, Amal. Up all the way from here, I think. Is that right? About here. Very, very nice trade there. Just there. Very, very nice trade, Amal. Let us know, are you holding it, or what are you doing? I'm assuming you've taken profits, or at least gone to break even. But yeah, let us know what you're doing with it. I was hoping for a sell for euro US dollar for take profit at support 144.50. Let's have a look on EU. EU, yes. I can see sells coming into EU. I can see sells coming into EU. We're in this little cluster here. If we can't break this level here, which we haven't done so far, we've had a bit of a wick rejection. We'll see how this 1 minute candle closes. If it engulfs to the upside, then we've definitely got more longs coming in. But it's holding for now, so it may now start to sell off. We'll see. Doesn't look like it though. Doesn't look like it. I think it's going to break through it. There we go. It's going to break through it, or it's going to create a double top, which would then be something for it to target later on. But yeah, it looks like we're going to go higher on that one. So I wouldn't be selling EU just yet, because it hasn't respected this level here on the 1 minute. So come out to the 5 minute. Where else do we have an opportunity? Probably somewhere around here, maybe something like that. Might be the next area where we've had this several wicks into this zone. So that might be a nice one to look at for selling. So that would be between 147.83 and 147.98 on forex.com. But these are not signals. These are not trades that you guys should take just blind faith. Go and have a look at them yourselves, and yeah, familiarize yourself with it on your own strategy and your own ideas. USD, possibly a sell. I just don't like the way it's just done a lot of this barcoding for the last 2 hours or so. Doesn't look particularly wonderful. And you've got now this support area. So I can understand why you would see it, but you've got to take into account other areas. You've got this little support level on the 15 minute. So the next 5 minutes would be interesting to watch. It certainly has reacted off a nice area that it's reacted off before. But yeah, something to wait and see. Today is a bank holiday in the US, exactly. So Eli, I wouldn't say that the dollar will not move, but right now, with Asia coming to a close and London opening and Europe opening, there will be moves. Just there won't necessarily be the liquidity flow that comes in when New York opens. There'll still be moves, but they may not be as significant as others. So yeah, but definitely worth bearing in mind with that that fact that New York is closed today for something called Juneteenth, some random Independence Day, because apparently they don't have enough Independence Days in the US. They need to have 2. I didn't realize they had 2. I just thought they had 1, but they have 2 apparently. So yeah, and yeah, guy, Moon. Okay, that doesn't mean anything to us. If you guys share your ideas, share your thoughts, but give us more context. Give us more. Gold will go up at a minimum of 10 points. Okay, that's a little bit better, but what we don't want, right? And I don't know what you think about this, Anastasiia, but when people, for me, if I was watching and I saw somebody say gold sell, GU buy, I'd be going, oh, quick, oh, let me find GU. Oh, where's GU? Oh, there it is. Okay. Oh my God, yes, it's a buy. Quick, buy, and just buy and get in and FOMO. And where do I put my stop loss? Who cares? What about my risk? Who cares? Just go in and buy. And then all of a sudden, it comes in and it might react off this wick, and you're toast.
Well, to be honest, you should be really naive to like be able to just get in a trade just from some YouTube comments. So I mean,
but I think there's a lot of people that do that. I think there's a lot of people that do that.
I mean, guys, do not ever enter the trade just out of the YouTube comment. Do your own bias. Even if you pay for the signal groups on Telegram or Discord, they do not work. So why should just a random YouTube comment work out for you good? It's like a common sense, you know? It's common sense. It's actually very necessary in trading, by the way.
Sorry?
It's like having common sense is absolutely necessary in trading, by the way.
Absolutely, but the point I'm trying to make is if you think about how many new people come into trading and don't have that common sense.
Yeah.
You know, I know when I first when I first started trading, right? I didn't know what I didn't know, and so I didn't think about what was common sense or what wasn't, right? So that's why I bring it up is, be careful, guys, when you do see comments in the chat that they're not necessarily the real deal. Vico, but what if there is a real great trader hidden in the comments? If there's a real great trader hidden in the comments, then I would ask, what are they doing in the comments?
But let's suppose, even if there's someone in the comments who has 90% win rate, you do realize that you need to take all the 10 trades out of 10 that they share to be able to be profitable, right? Because majority of the times what is going to turn out is that you're going to miss good ones, you're going to take bad ones from someone who shares them, and you're going to over risk and you're going to still lose. So signals don't work for two different reasons. One of the three reasons is, why do profitable traders share signals in the first place? That's an unanswered question, right? But secondly, like, people are not able usually to manage it correctly. Not their emotions, not their risks, not being able to be consistent. They wake up in the morning, they have this paid signal group, and they're like, oh, now is a trade, and they missed a whole bunch of the previous ones which are profitable, and they take the one that are losing. I've seen it so many times. So yeah. It's just, even if there is a absolutely diamond hidden in the comments, the chances are that you're not going to be able to utilize it for benefit.
T-Wavy, it didn't. It's come into that area that I said it might do, and it's reacting off. So, but again, this isn't a signal. This isn't me saying go and sell EU. This is me analyzing the chart in the way that I analyze it and telling you what I see. So
I like Void. So true. So true.
Do you know what? You find somebody with common sense, you want to bottle them and keep them safe and secure and protect them from the madness of the world, so they don't become contaminated from the insanity.
Yeah.
I wouldn't say you're a swing trader necessarily, are you, Anastasiia?
No,
I think that's
swing trader. I'm more intraday / intra-week. The longest my trades run is about 3 days. So not longer than that.
Yeah. I am just looking at Beverly's question regarding gold. I'm looking for gold to come up to this area here now, around the 370, 355 to 375.35 in that little area, in that little pocket. So yeah. I've seen people that follow multiple signal groups, and they usually go on to say why they're not profitable. Well, when they're following multiple groups, I wonder why. Cam, you are quite right. Because I'm happy to admit I got into trading almost 3 years. Well, it's 2.5 years ago now that I got into trading. I found signal groups because they're marketed to you and they're sold to you, and you think, oh yeah, okay, this makes sense. You know, it's like with anything. When you first get into something, you don't know what you don't know, and so you go into it thinking, yeah, okay, this makes sense. It's only then if you start digging deeper and start, you know, learning about it and everything else, then you start to realize that signal groups are just a scam, right? And you know, they're not really anything, you know, worth your time or your money. The problem is a lot of people go all in on them, lose a ton of money, and then they just walk away from trading altogether, right? Rather than necessarily taking the time and the energy and the effort to go and learn it and study it and really understand what works and what doesn't work for them, right? Wukash is saying, Vico, it doesn't matter who is pro, you must listen yourself and read the chart by yourself, because even there is pro trader, but the system of trading cannot be suitable for you. Quite right, Wukash. Quite right indeed. So yeah. And there is no easy way in trading. The only way in trading is your own way in trading. So yeah. Let me give you a pro tip, food for thought. The supply and demand dynamics are not order blocks. Order blocks are subjective. The real dynamics are different, and those create the moves. Okay, so Vico is the pro trader in this group, in fact. I didn't realize. Okay, thank you, Vico. So bring us, if you want to share your signals in here, then be my guest. I don't know why you're talking about order blocks. I haven't mentioned order blocks, but thank you for that tidbit. Let's see. Nabodit is saying, or Paul is saying, I'm thinking to sell gold after 5-minute low break. Let's see. No, you're not signals. Okay. All right. Good to know. Good to know, Vico. I don't think it's ready yet. That's just my own personal opinion. It could, but I'm not seeing any major structural setup on here at the moment on gold. Reason being is it started here with this perfect equal high, which I see as a major liquidity level. It's got this inside bar. It's got this wickless candle here as well. So I think probably what we're going to see is we're going to see some kind of reaction here, and then we'll push on up higher. It's just you guys are doing the great job, and I really like your stream, but the markings of liquidity on your chart speaks about those blocks. The markings on my charts, Vico, are just what I have back tested and what I have looked at. So I have levels of liquidity that I look for, and they give me my edge. So yeah. Are you guys safe? Cause from Israel, stay safe. Yes, we are all safe. Thank you, Koyas, for asking. But everybody that we are aware of is safe. So yeah.
Mike, I'm going to stop for a second if you don't mind.
Yep.
Yeah, I'm looking for a sell on NASDAQ. And I know the market is half closed today, so that's a sell for the next days, maybe even over the weekend. Okay, so let's just make it clear. Like, this is right now, for me personally, I'm going to be looking for shorts. And the reason for this is that if you look at the 4-hour time frame, we see the huge volume node right here. So that's the whole zone which the price had created over the past months. So this is like a monthly volume profile from the beginning of the June. And the majority of the volume is right now here. This is what the level that the price rejected yesterday. So this is a rejection. Not yesterday, but a couple of days ago. So we had the rejection, we had the pullback back to the upside. And yesterday, after the FOMC meeting, we had a sell-off from the contract point of control, so the maximum level, the maximum contract level of the contract that is now being traded. So the price did break it and now is retesting it to the upside. So if you look at the 4-hour candle, we'll see how the price broke through it, tried to pull back, breaks through it again, and now pulling it back to retest. I'm looking for the sell on NASDAQ, and let me go back to the 30-minute time frame. And this is something I'm looking for. So we had the rejection of the zone, right? This is the point of control that I was talking about. We had the attempt to recover from here. which the price did fail and went even below. It broke the previous lows, and the candle closed lower than the wicks were created, which this is a sign of the rejection for me. This is a sign of the breakthrough for me, so the breakout. Because if you look at the body of the candle, it shows the strength of sellers. So the candle closed barely with no wicks to the downside compared to this one. So this is the same level, right, that I was talking about, the same volume zone from the monthly time frame, the point of control of the whole month. We can mark up this zone right here, like this. This was an attempt to recover from it second time, and this was a breakthrough. So now we are retesting it. We are also retesting the daily point of control. This is the monthly point, dynamic developing point of control as well. So it now went above the price compared to where before it was below the price and was acting as a support. So now the developing point of control of the months, so the instrument that I used to see the liquidity, how the money moves in the market, went above the price. So I'm expecting it to hold the price from breaking higher. So right here, we see the rejection come in. So we had 3 candles already, bullish candles that are trying to go higher, but still failing. So we have wicks to the upside. This 30-minute candle, which is going to close in 23 minutes, is also failing to go higher. So I'm expecting maybe at the maximum to see the level of 21,850 to be reached, and then the sell-off. And for the sell-off, I have several zones that I'm looking for. One of them is this cluster volume accumulation here. So we had quite a lot of volumes traded at this specific level. And this instrument that I'm using is highlighting the specific cluster with a specific amount of contracts. And it's different from asset to asset, obviously, because the volatility of the assets is different. So for NASDAQ, we see that here we had lots of cluster volumes in one space. So this is the zone that I'm waiting for the rejection potentially, if it reaches it. And that is already approximately, what is it, from the current level, I would say 700 ticks that I'm waiting for the drop. And then the next level, this is 21,650. The next level is going to be 21,485. And the latest one is 21,382 that I'm waiting for. So I'm already in a sell. I'm expecting the continuation. But again, it's probably not going to move there today because the market is closed for the bank holiday. So most likely it's going to be already for tomorrow. And I will have to hold that over the closure, which is slightly uncomfortable, but let's see.
Yeah. Let's see. Billy, we are based all over the world. So all good, mate. All good. Don't worry. Everyone is safe and well. Did I hear Mike say that gold will test 75-ish and retrace, or did I hear wrong? Bad hearing. Cam, I didn't say it will retrace. I said it might retrace. I do think it is going to still go a little bit higher. And I will show you my screen so you can see what I'm talking about. You can see here, broke this area that I thought may act as resistance. The next level was this one here. And what it's done is it's tapped literally by probably about a cent into it and is now pushing up higher. So it's left this trail of liquidity, major liquidity in my terms and my definition of it, because everyone used the words, right? We'll go back to that point earlier that somebody made about order blocks and everything else. They're just terms, they're just words, right? But everyone has their own definition, everyone has their own meaning, and everyone has their own, way of looking at things. I always say it's like looking at artwork, right? Somebody looks at a piece of art, they see one thing. Somebody else looks at it, they see something entirely different. You might call it the same, you might, call it something different. But it's your own interpretation, your own edge, and your own psychology that will make you or break you as a trader. Here we can see gold is pushing higher again. So I expect us to probably come up to, I expect us to come up to this kind of area here, maybe, to then possibly sell off. That's my my current bias, but I am still short on gold for the time being. The reason being is that if we look at gold, the way it's sold off quite significantly here, it broke a previous trend line that we had, and it closed below that trend line, which was just coming from here to, oh, it wasn't that one, sorry, this one here, this previous low here up to here, I believe. There we go, closed below it. So I believe we are going to see some further downward momentum. It's reacting off this wick that we had here, but I don't believe that this wick is actually any kind of support. So I still expect us to come lower. The reason being as well is that we have, if we look at the weekly on gold, LJ and I were talking about it. If I turn all of that off and we look at the weekly, you can see the weekly is showing a lot of bearish momentum right now. It's reacting off this move here. And as LJ and I were talking about this morning, it feels as though the markets are now just kind of waiting to see, you know, that gold has been so heavily bought up because of fears of various different instabilities and vulnerabilities and everything else. Now the markets are kind of like, oh, do you know what? Okay, enough. All right. We've bought up, we've got our positions. Now let's just solidify those positions for one way or the other, right? So whether that be sell positions or whether that be buy positions, it feels as though the markets are now trying to, you know, get a bit of equilibrium. You know, there's, you know, you look at the reaction from gold over the weekend, this last weekend, with Iran and Israel, you know, firing missiles at one another. Gold sold off. Right, gold didn't do anything on the open on Monday, so it does feel as though the markets are now just kind of going like, okay, all right, this is fine, and they're almost accepting this new normal, if that makes sense. So yeah. QD, everyone tell me gold next point. You tell us, QD. You tell us, and let's see if we agree. All right. Do you draw support resistance on candles or on a line chart, is asking Omar. I don't use line charts. It is something that I've dabbled with, and it's something I've dabbled with. Those of you who know Scruffy Trader, if you don't know him, go check him out. He's a great trader, based in the UK, and what he does is he uses the line charts to draw out levels. So what he would do is he would go in and he would say, right, okay, that's a it's going to draw all of it, isn't it? He'd turn around and say, right, that's a monthly level, right? So that's a monthly level where price changed direction. Okay. He would come and say that this was a monthly level as well. Okay. So where did price change direction? Then you'd have a bunch of monthly levels down here. Then he'd go down to the weekly, and then again he would look for, right, where are the levels? So you'd have one there. Oh, sorry, not that one. He would go to something like that. He'd go to something like that. And what he does is he uses them as a trading arena. So he will turn around and say, right, okay, we're currently in between these weekly levels, right? So he would turn around and say, right, well, there's a weekly level there. And so we're trading within that arena. And as he drills down for a day trade, he can then see, right, where are we likely to see the next reaction from? So that's how he uses the line charts. I haven't looked at it in any other great depth, because, yeah, I mean, as you can see, I already have a very colorful chart. So going into greater detail on line charts and everything else, I feel is probably going to push things a little too far. So yeah. We have a question for you, Anastasiia, on your view on gold, if you would be so kind, for the masses that are watching already. We already have 421 on Twitter and 249 of you watching on Facebook, not Facebook, YouTube. My brain is not braining today. Make sure you like and subscribe, guys, and yeah, help us get more and more of you so we can expand our sessions as well. I'll bring up your, I don't know if you want that chart or do you want the other one?
No, this one. That's the first one.
Yeah.
That's still NASDAQ. Yeah, this one is good.
There we go.
That is gold. So what I'm waiting for, wait, do I have the high chart? Yes, here. So on the 4-hour time frame, if you look at gold, and I always look at the big zones first, like it's daily, it's 4 hours, it's weekly. Majority of the time I look at them during the weekend. So just to mark out the big, massive zones of volume and know from where to where I usually trade. Now, this one has this big volume area above the price. So I said I'm bullish, but I'm actually bullish only until the price reaches the zone. And then I'm going to be looking for the short continuation to the downside for gold. Let me just quickly change it to the volumes here, the settings. Here we go. So if you look at the volume distribution on the way to the downside, we had this massive consolidation, obviously. You don't really need the volumes to be able to see it, but they help to identify the specific level. So right here, we have the massive volume accumulation. And when the price retraces here, I'm going to be looking for the continuation to the downside. Now, what I want to also check is where is the value area. So give me just one moment. I'm going to check it. I'm gonna have it back here. Yes, right here. So even maybe actually I am maybe Mike, I'm maybe gonna agree with you and say that gold may be bearish immediately, straight away. So I'm looking for these two zones. This one is the first level right here where this gold is right now. So let's turn it back to. There we go. This is the first one, and that is above the second one. So now this 4-hour zones, if we go back to the 30-minute time frame, those are the two zones of volume that I'm expecting the price to reject. So maybe we're gonna go a little bit higher now. I'm not convinced that gold is ready to sell off yet. And the reason for this is this cluster volume that was traded just an hour and a half ago. We have this huge cluster volume. We see that the price rejected it lower and the point of control as well and went higher. So unless we are holding this, I am still going to be bullish for the continuation to the upside slightly. So what I'm looking for gold is something like this to happen. So here, towards this area here, and maybe a little bit higher towards this zone. So let's say it is, I'm looking at the future, so that's approximately 33.95 level. And the second one is approximately 3,400 level. And out of these two zones, I'm going to be looking for a sell to the downside. So approximately to 33.55 for gold. Wait, let me just make this arrows kind of straight. So this is what I'm looking for. Eventually, if the price breaks through and closes below the level 33.84, below this cluster volume, alternative scenario for me would be that I would be selling. So already before. So if it closes, the candle on the 30-minute time frame closes below, I'm going to be waiting for the slight pullback and then continuation to the same level to the downside. So that's 33.55 still. So that's an alternative. But for this, the 30-minute candle has to close below this cluster volume. And the 33.55, if you are wondering, is the level that I was marking up yesterday on the stream. And this is the point of control of the week, the weekly point of control. So if I turn, this is futures. If I get back to trading view, which is more familiar to everyone, this is the level, 33.59, 33.55. The price didn't reach it yet. So it perfectly worked out with one first of my levels. And then this one, the price never reached. So I'm still expecting that if it closes back, it may go here. And if not, then a little bit higher towards this zone and then going back down. That's some crazy drawings. But anyway, you got it.
I expect better drawings from you normally, Anastasiia, because you're the one who can draw straight lines better than any of us. So I was a little bit disappointed with that one, I've got to say. I was expecting better, but never mind. We can't all be perfect, even Anastasiia. So not all the time, anyway. Gold is currently pushing up slowly but surely. That 372 level on the CFD levels, 372, 375 area still looks like a nice area to potentially consider longs. Right now, I wouldn't be touching it. I'd be just waiting on my hands and wait and see. So yeah. DJ's asking, do I ever trade the weekly and daily for longer swings? I probably should. I might actually make a decent trader out of that. I just can't get my mindset to be that patient at the moment. So I need to work on that somehow. Maybe do some more yoga or something, or I don't know, something to enable me to just let go of trades and just leave them running. But yeah, I mean, I think it's the lack of patience is a definite weakness for me. Void saying, I'm in a DAX long since it based after London Open 5-minute chart, and now it's stuck. Anyone from Germany push it higher, please? Let's see. No, it's all right. It's going. There you go, Akram. There you go. All it needed was for me just to open it up on my chart, and it's heading on up for you. So there you go. I don't know what your TP is though, mate. So yeah, but it does seem to be slowly but surely heading up. So I think you're all right. I'm assuming you're probably looking for something around this area here, 23,250, something like that, for a TP. I don't know, but let us know. Venetius is back. Excellent stuff. Wavy, what is it about EU that you want to know? Tell me. What is it that you want to know about EU? Okay. Do you want to know exactly where is it going to react from? What's it going to do? Right. Well, look, I'm honestly, this is not a signal service. Okay. But it has broken the level that I said to watch out for. And other than that, it hasn't done anything. Okay. So the best thing you can do is have a look at it and keep an eye on it. And yes, we will look at Euro USD, but we're also going to look at gold. We're also going to look at the NAS. We're going to look at other currency pairs that everyone else asks for as well. The level I'm on about, Wavy, and this is the last time I'm going to talk about it because I'm pretty sure nobody else is interested. 14783, 14798. If you use the little red dot on YouTube to go back on the live stream, you can go and see what we said before and you can hear it again. But I will say it another time just to be clear. 14798 to 14783 on forex.com on TradingView. That's how we go. All right. Moving on. Mike the Lucky Charm got a trade Germany after I was in FOMC Spain without the okay. I was thinking you're in Spain. What are you doing in Spain, Akram? Confusing me. Wavy, it's not the last time we're going to talk about. We're not just. Yes, I'm mean. Yes, I am mean. Sorry. It's my British sarcasm. I apologize. If there is an opportunity on EU, we will no doubt talk about it. Okay. But right now, it has broken this level that I spoke about earlier, which you can go and scroll back and look at on the stream, and it broke it. So I don't think the EU is ready to sell right now. That's my personal view. I don't know. What do you think, Anastasiia? I
also don't think so. It might, but I'm not 100% convinced yet now.
Yeah.
No.
So there you go. All right. You know, we're not here. I'm not mean anymore. Okay. All right. Lovely. Okay. Wonderful. In the meantime, gold is pushing. You see, and then I've spent this time looking at EU, and all of a sudden now the guys want us to go to gold. You see, Wavy, this is the problem with live streaming, is that we can't just do one or the other. We just have to go with the flow and look what's happening. So gold is pushing up. So where is it going to? It's going into that area that I mentioned. So let's see, what is gold going to do? Normally when it has a big impulsive move like that, it will come up and react back down. You get a lot of wicks on gold, so you've got to watch out for those. Let's have a look at that. That's not a wickless one, so it may be enough that we've tapped into it. All right. As you can see there on the 1 minute, we have a nice wick coming back down. We'll see how that 1 minute closes. If it closes like that, it's not ready. If it wicks down, then it might be a sell opportunity, but we have to wait and see for a better confirmation. Right now, that doesn't look ready. And sure enough, it's going higher. So that is what I would be looking at on gold right now. It has come up to the area that both Anastasiia and myself have said potential sells. But yeah. DJ, Anastasiia and Mike, how do you deal with trades that you plan so meticulously and miss your entry for some reason? Maybe you're waiting for a level and it plays out outside of your session. Anastasiia? You have more set positions, don't you? You have more limit and limit and stop positions, should I say?
It's been let's say like this. It was difficult before. Like before, I used to really get into this, and like FOMO would kick in, and I would feel like I really missed out on an opportunity of a lifetime, and I was marking it up, and I was waiting for this trade, and I didn't, get into this trade. And before I was trading even more swing, so you can imagine if you miss the trade and you just didn't put an alarm or some alert, that it goes for hundreds of pips, and it was really, really painful. Now, with the time, I got really sick and tired of losing money because of the FOMO and because of feeling like I'm missing out on opportunity. So only when I got sick and tired of getting in my own way, I stopped caring about the trades that I missed. If I miss the trade, then, the only things that I can do is analyze, why did I miss the trade? Maybe I need to adjust my trading times, or maybe it wasn't in my trading times, and then I don't care because statistically this is a time that I'm going to be profitable and the other times I'm not going to be. If it plays out at night, well, it is what it is. I would prefer to get enough sleep and being able to in the morning focus on other trades, being able to focus, concentrate, and make quality decisions rather than not sleeping at night and trying to catch this one trade that might play out, might not play out during these times. So, how do I deal with it? DJ, honestly, right at that moment already now, I really don't care. Like, if I do see, for example, gold yesterday, I'm like, if I can, like gold yesterday, it was a perfect buy here, perfect sell here. I could easily take in those trades. Did I? I didn't, because it was FOMC. Someone was asking me, Daniel, I don't know if Daniel is here, actually, one of my students, he was like, really asked, can you mark it up? Can you send it to me? Can you share me your charts? I'm like, Daniel, I'm not going to do it because it's going to be irrelevant. Even if it plays out, even if it doesn't play out, it doesn't matter, because the volumes and the price action and the behavior of the traders is different before FOMC than on any other normal day. So it's irrelevant. And I'm not sad about missing those trades on gold because it wasn't the normal situation that I would trade on. And let's say I would get in the trade of gold yesterday and it would perfectly play out. In my mind, in the back of my head, my mentality would write it down as, hey, we should trade during FOMC because it plays out good for us. And the next time it's going to completely crush me in my account, because it's not something that statistically you can create a system that is going to work that time after time during the FOMC meeting and during their interest rate decisions. If you want to trade during this specific time, you need to tap into fundamentals, not technicals. And it's going to be different because interpretation of the same situation is going to be different from month to month, and the situation is going to change. If you want technical approach, it's not something that you want to trade. So I'm always asking myself, can this situation that I missed be used as improvement to my system? And if it can't, then I just let it go. Then it is what it is. DJ, I don't know how long you've been in the market, but if you load enough in the market, you know that the next trade will come. And the next trade will come, and the next one will come, and the next one will be there as well. And you don't allow one trade to destroy your whole process and your progress that you've been building up for weeks or months. If you keep this in mind, to not let one trade, one FOMO, destroy all the time, effort, and money that you've spent on building this one thing up, then it's easier for you to let it go. So that would be my answer.
There you go. And as for me, DJ, I can't. I think it would be against any lying rules on YouTube that I am so meticulous with my planning and whatnot. But if I miss an entry, I miss an entry. They can be frustrating, but more often than not, I catch good entries. My problem is my psychology when I'm in those entries and holding them. That's my bigger challenge. So I don't go. My approach is I don't go back and look at what trades I could or should have taken. I'm just looking for the next one. Victor has a very good way of saying it. Victor, who's on the stream, and he'll be on with us in a little while. If you didn't catch a trade, it was just somebody else's trade. It wasn't yours. It was just somebody else's because somebody else took it because the market moved at that point. Doesn't need to be your trade every time. And it goes back to what Wavy's asking. Wavy, that's trading, mate. You got to sit and you got to wait and sit on your hands and wait for the right right opportunity that fits with your strategy, fits with your setup. But it's got to be your setup. It can't be somebody else's. It's got to be your setup. Otherwise, you're just chasing the market. And the market has a great way of humbling you when you try to start chasing it, you know. So yeah, we did have somebody new joining us. Deborah, good to see you. Welcome. It is good morning for myself and Anastasiia, but I know it is good afternoon and good evening for many others. It is good evening, for example, for Henry. I think is still with us in Australia. So welcome to the stream. We are here every Monday, Tuesday, Wednesday, Thursday from 8:30 GMT all the way through to 2 o'clock GMT. So we hope you like and subscribe and you join us for all the other live streams that we have. But welcome, and hopefully we can give you some tips and insights into being a Forex trader. Yeah, okay, Wavy, that was just a little bit too much information. So yeah, thanks for that. And DJ, you're very welcome. Yeah, just guys, you've got to. I think trading is one of those things where everyone thinks there is like this blueprint or this formula that works, right? And everyone is like out looking for this holy grail of this is it. This is the algorithm that works every single time. But Forex, do you know the amount of money that is traded on a daily basis in Forex alone is something like $7 trillion a day? Now, if you just think about how many individual traders and institutions and everything else have to be involved for that amount of money to exchange hands every single day in Forex, it gives you an idea that there is no one size fits all. There is no holy grail algorithm that is just going to win every single time, because that's not how the market works. All you can do is find a strategy and a way of trading that works for you and your psychology and the way you see things. I've spoken in private with Anastasiia, with Victor, with Rich, and loads of others, and they'll talk to me about their charts, and they'll talk to me about how they see the charts and everything else. And I go and I'm like, yeah, kind of makes sense. Like, in fairness, out of all of them, probably Anastasia's makes the most sense to me because it's visual and you've got the volume profiles and it's, you know, it's clean and clear and makes sense. Rich has a way of looking at the charts that he spent 8 years fine tuning and honing, which I still don't quite get. I still don't get it, right? And you know, Victor has his way of looking at the charts. Think about looking at the charts as looking at a piece of art, right? You will look at it in a different way to the person stood next to you, and that's okay, because your interpretation can still be valid, because you might be swing trading instead of scalping, etc., etc. So don't go trying to chase somebody else's interpretation. Go and build your own interpretation and your own way of reading the markets. That would be my advice to you. And Alex, you're most welcome. Glad to share that. I'm just looking at the chat. I'm glad you agree, Wavy, and I'm glad you think that I'm not so mean anymore. That's nice. I'm glad. I'm glad I've managed to change your perception of me. That's good. And Jonathan, you are most welcome. So yeah. If we look at gold, has gold come up to that area? It has, but it hasn't done anything since then. And the reason I wouldn't say gold is ready for sales is because whilst we've tapped into this area that I marked out, the way the move started here at the top is a perfect equal high. And for me, that means that's an area that price is going to come and take before any significant move. Perfect equal highs, perfect equal lows, wickless candles, and inside bars. Those are the three types of levels that I look for and mark out as where price is going to be drawn a bit like a magnet to those areas to create equilibrium. So yeah, be a good trade. To be a good trader, you must develop psychopathy. Otherwise, you will never be cold enough and committed to learn how things really work. If you are one, you will trade well for sure. Okay. I'm not sure we want to encourage psychopaths here, Venetius. We're a friendly bunch here. I don't think we want to encourage any cannibal lectors or anything else like that. But I hear your point. It is yeah, exactly as Nora says. Let's not become psychopaths. There's plenty of those in the world.
Let's call it you need to be aware of your emotions and know how to manage them. Let's call it this way.
Yes, exactly. So yeah, I think it's that's probably a better way of putting it. But on that topic, Mark Douglas's books are very good. The Disciplined Trader is very, very good. So yeah, Nora, that's a little bit too much information and slightly scared now, but thanks for the information. So yeah. And the trader house, if you are the trader house, you shouldn't need to ask 5 times the same question. I'm sure you know the answer yourself. So we're not going to be answering spammy questions. So yeah. Only the qualities of a psychopath. Venetius, I'm not sure that's necessarily. I'm not sure that's necessarily increasing my conviction. So yeah. And Omar, yeah, I call it a poor high or a weak high. Reason being is that price has come up and it's created this perfect equal high to the cent, right? So it's exactly the same. So that's one to be careful of. And Rosalia, I'm afraid not on this channel. We do have a Portuguese channel at the moment, but we don't have a Spanish channel, I'm afraid. But if you speak nicely to Anastasiia, she might speak to you a little bit in Spanish, because I know she has many languages under her belt. So,
Rosalia?
See, there you go. What was it? I can just about remember something from my Spanish classes at school, but it escapes me at the moment. Anyway. Emmanuel, I did see you talking about the NAS earlier. So Anastasiia was looking at the NAS herself earlier and is looking at sells at the moment, as you can see from her chart right now.
Yeah, sells, and I'm holding sells at the moment, and this is already trading view. So what I'm looking at is the majority of the volume was above. So what I'm looking at is a sell from the daily point of control, which is right here. So let me mark it up so it's more visible. So that's a daily point of control. Majority of the volume is right here for the day. And if we look at this period, this specific range, and I put the volume profile over it, we will also see that at the same level, there was another high volume node here. So we will see that we had another high volume node, which was holding on. The price did hold it twice, then broke through it, and I'm waiting for the continuation to the downside from here as well. And the value area low was also here, so the price did break it. So I'm waiting for the continuation down for NAS until 21,655, 21,650 perhaps. And there is another zone right here in the middle where I'm expecting the rejection from. But I am short on NAS and I'm short on S&P 500 as well, which, once again, a quick disclaimer, not a trade advice, and definitely can happen that I will have to hold it over the market closure today. Because we do have the early market closure at 12 p.m. CST due to the bank holiday of US. So be aware of that. This is a specific asset that is going to move likely on the US market only. So if you enter it right now, be prepared to get stuck in it.
Yeah, exactly. Abdul's asking, why is the Israel-Iran war not impacting on gold? Everyone thought that gold would go high, but I think you mean it's bearish. Abdul, we've talked about this over the last few days. In fact, we've talked about it all week. And LJ and I were talking about it this morning on our AlphaBeta Lab stream. And if you look at gold, I'm just going to pull this up again. And I'm going to hide all the drawings, and I'm just going to pull up the monthly chart. If you look at where gold is, right, gold has already shot up massively, right? It is incredibly bought up. Last month, in the month of May, it was essentially an indecision moment, right? I think there's a general consensus right now that the markets are kind of almost, I wouldn't say they're immune to it, but they are less sensitive to the more extreme news, or what would appear to be extreme news, right? You know, over the last 3 years, the markets have had to get used to the fact that you had COVID, then you had the Russians invading Ukraine, you've got the instability with Taiwan and China, you know, Israel and Iran have been on the brink for years. This isn't anything new. Yes, this is you know, this is probably the most furthest they've gone in terms of all-out war and everything else. But the reality is the markets are kind of like, it almost feels like the markets are going, yeah, and all right, whatever. They're almost waiting for something genuinely that is going to change the economics and the fundamentals of things, rather than simply just everyone going, oh, let's go buy gold, right? Because, you know, even the Israeli offensive into Gaza, you know, we're going into 2 years soon. The markets they kind of just get used to it. They get to a point where they're like, okay, this is the new normal, this is the new benchmark, and they wait for the next even more crazy thing to happen. I don't know. What do you think, Anastasiia?
I also think that it's because, well, in the past couple of days specifically, I talked about it yesterday actually, is because US did give 48 hours to Iran to sign the deal. So gold is kind of calming down a little bit, waiting for the deal to be signed. So I'm expecting this. Besides this, for the Russians invading Ukraine and the war in Ukraine is like, it's been 3.5 years. So the market has essentially get used to it already. So it's as well as traders and investors. So I do agree with you on that, Mike. Regarding the Pakistan and India, also the things calmed down. When they were escalating the first couple of days, we remember that gold went sky high, and then they calmed down back again. And now, you know, the Iran and Israel, as much as the horrible things are happening now, gold is not based on this. Gold is based on the possibility of it getting solved fast. And the fact that it's going like it went down is essentially means that people are waiting and expecting it to get sold rather quickly with the help of US perhaps. So let's see.
Yeah.
But yeah, I'm overall still bearish on gold for a little bit, and then perhaps back to the upside. I'm waiting still into how the situation is going to be in Iran for the next 24 hours, actually. And then tomorrow I think we're going to get more information as well.
Yeah. Here was something, we don't look at stocks on this stream, but if you go and check out the sister channel, Trade the Pool, you'll see it on the top of the screen, mentioned from time to time. You can go and check them out, and with them you can go and trade the stocks, and they have live streams as well. So make sure you check them out. They'll love to have you in there. So yeah. And there was another comment that I just wanted to pick up on. Electrician is asking, what's the volume profile that you use, Anastasiia? It's not a paid one, is it? It's one that's built into TradingView.
No, it's built in TradingView, and I'm using in TradingView specifically. I'm using PVPs and VRVP and FRVP, which is a drawing tool. So the drawing tool, I believe, is completely for free. So even as in the base version of TradingView, and then PVPs and VRVPs, if I'm not mistaken, you do have to have a paid version on TradingView, but it's still, you can, it's still just, you can pay for TradingView and it's built in afterwards in those. So visible range volume profile, VRVP, periodic volume profile, which is PVP, and FRVP, which is fixed range volume profile, and you can find it on the drawing tools panel on the left side of your screen.
There you go. Beverly's asking, do I use an indicator to show my points of interest? I use the SMC by Cux Algo, and it really helps plot the POIs quite nicely. Just your opinions on that. No, I don't use any indicators. I look at the chart and I look for them myself. I've tried building my own indicator because of the specific nuances of what I look for. But yeah, I don't use indicators for marking out those points of interest. If I find one that marks out those liquidity levels, then yes, I'd use it. But I still go through all the time frames anyway to mark them out on different colors, because it's quite complicated and it's hard to, in fact, I don't think it's possible to get an indicator that will look at all the different time frames all at the same time. So I would still have to go through them all and mark them out anyway. So yeah, but I have my process of how I do that anyway. So yeah. Yeah, I mean, there's conflict all around the world, unfortunately. So yeah, it's not exclusive to one region specifically. So yeah. And Alu is saying, and now we have the digital gold Bitcoin as well playing in. So physical gold may not be really the run to, I'm not sure I necessarily agree with that. I think physical, there's still, I think we're still at a point where Bitcoin is becoming more established as a respected asset. But I just think it's still got to convince a lot of people. I think a lot of people still believe that physical gold itself, rather than something digital, they still trust it a bit more, especially when you look at things like the hack that took place, I think with Ethereum, was it? I think it was the North Koreans that did it. So there is still a very uneasy sense, I would say, with regards to that. And it looks like we might have another trade going in with Anastasiia.
Yeah, I'm looking for the sell on S&P 500 now as well. So I'm short for NASDAQ, and I'm perhaps looking for S&P too, which is almost 1 to 3 actually. But again, it's like, yes, but it's a bank holiday and you might get stuck. It's like, it's now a wait between, I might get a very good entry and it might go a little bit in my direction and I'm going to get stuck and I'm going to pay swaps and stuff on that. Or I'm going to miss out on a potentially good entry and I'm going to try to re-enter it tomorrow when the market reopens over the night. So it depends, but I'm looking in general for the bearish direction. And the reason for this is if I shift back to my futures chart, this is S&P 500, and we are right now at the developing point of control over the months. So this is this, literally, we are rejecting it. And if we go to the 5-minute time frame, that's euro, that's 5-minute time frame, we will also see this is footprint. We have the daily point of control here as well, and developing point of control of the day as well, and we see how the price is holding it and trying to reverse. So it's right now is my point where I'm looking for a sell. We also have quite a big cluster volume here, and if you place the volume profile over the smooth to the downside, we will see the point of control also on this one.
Yeah.
So I'm actually looking to sell right now for S&P.
Yeah. GS, Anastasiia is looking at the futures markets. That's why you're seeing a different price compared to your MT5, because your MT5 is based on CFD prices. So there you go. Jack, welcome. Good to see you. Been trading for 7 to 8 months. Strategy is fine, but this discipline is not good. How to make it continue for lifetime for at least a year or two? Oh, that's the $1 million question, isn't it, Jack? How to navigate that psychological barrier, that psychological ceiling that we all hit. So yeah, it's if I'm honest with you, I don't think there is one answer. You've got to find the answer that works for you, because it depends on your personality, your psychology, your demons and trauma and all many other things. But that's what I love about trading. Actually, trading exposes you to your vulnerabilities and your weaknesses when you least expect it. So that's actually one of the things about trading, is that you get humbled very, very quickly and easily without even realizing it. And it's then just up to you to learn those lessons, I would say. If you can do that, then you've got yourself a great advantage. So yeah.
Yeah.
And yes,
Actually,
it is a bank holiday, AJ, in the US today. It is Juneteenth Day, whatever that means.
it has a funny name, isn't it?
It's a very weird name, but it's Independence Day. It's like they can't be independent once; they have to be independent twice. So it's almost like the precursor to July 4th. So
yeah.
So yeah.
Yeah, we actually Omar, we do actually. This is why I zoomed in into the footprint chart. We have lots of imbalances on the bid side right now going on. So in this one last candle, we see the footprint is majorly red. So compared to this one, so we had a green footprint, then a green, then a mix, and now this is a red one, saying essentially that we have more bids and asks by market. So there were more aggressive sell by markets and buy by markets overall. And we have lots of imbalances on the bid side as well. So those are a couple of numbers here, which are highlighted in orange. There is a third one is created and one candle only on the one side, which is showing the disbalance on the bid side as well in this one candle. So it's just like an extra confirmation for my short.
Yeah. Excellent stuff. That's a good question. Anastasiia, you trade the NAS more than I do. What's your experience with the summer months? My experience, or at least my knowledge of it, is that they can be quite subdued.
Yeah, actually, I have June is still good months for me. Usually this year is with Trump is 50-50. Now July and August are usually not the best. But it depends. Now we need to understand that we have a different variables this year. We have Trump, we have his tariffs, we have the interest rate that might change over summer, for example, if the things are going to continue to cool off with housing market and the CPIs and everything. And we have also, the wars going on, also Iran, Israel, Ukraine, everything is in the air still. So a lot of things can change. So this year, July and August might be quite volatile if the things continue to escalate. So let's see.
Yeah, absolutely. Thank you, Nora and Five, for the insight. I didn't know that it was the end of slavery. That is quite right and quite valid to celebrate that one. Probably even more so than the other one, I would say. But yeah. GS Tim is saying to keep with ICT. Just there is no most successful strategy, because it goes back to what we were saying earlier. You've got to find the right strategy for you. So if you're jumping from all of these different ideas, it means that you haven't found something that makes sense to you. So find something that makes sense to you, back test it, and then work with it. right? If you're going to jump around, you're just going to confuse yourself, and you're just going to add multiple layers to something that then becomes too complicated. Keep it simple, and hone in on something that when you look at it, you go, "Oh yeah, that really makes sense," and then go and back test it and see if it works. What's your take on trading on Mondays and Fridays? As a beginner, I see a lot of don't trade on those 2 days. Yes, a lot of people will say that. Mondays and Fridays, a lot of people will say that the liquidity is lower, the volatility is lower. So yes, you will see a lot of people saying that. Doesn't mean there aren't opportunities, but you've got to kind of check it for yourself and see what makes sense most to you.
I'm going as well, Mike, if you don't mind. So
yeah, sorry,
for example, I do trade on Mondays. So I even trade over the Monday opening. The only day of the week when I trade overnight is Mondays. Now, I usually don't trade on Fridays, but it doesn't mean that it's not going to work for you. So the best way to find it is to backtest your system over the period of 3 to 6 months at least, and see which days are the most profitable for you. You can easily do it in Notion. Excel is going to highlight the days and the consistently profitable days. And you will see which days are the most losing days, which days are the most profitable days for you. And then you can go deeper, and you should technically, and see which hours of the day are the most profitable and the least profitable for you. And then you're going to figure out that, okay, my trading system is these days, these times, those are my trading times. And then you can go even deeper and find the average duration of the trade, of the profitable trade that you take. Let's say the average duration of the profitable trade is like 1 hour. And you know that if trade runs over hour and a half or 2 hours, then it's usually a losing trade or break-even trade. And it's going to be easier for you to close it off manually instead of keep hanging around and hoping that the trade is still going to turn out profitable. So a lot of these things are solved just by backtesting, and it's boring. People don't want to do it, but a lot of these answers are in your own work, and they're not outside, because a system that I trade might not suit you, or the system that Mike trades might not suit you, and you need to find your edge, your times, your days when you trade.
Yeah. Guys, if you're interested in hearing more about what Anastasia's got to say, head on over to the AlphaBeta Lab, where she shares insights in there. But you can also find links to her social media and all those lovely stuff in the description below. So you'll find that all there. And if you want to come and join us in the AlphaBeta Lab and you don't know what the AlphaBeta Lab is, go and check it out. The link is on your screen right now, and it is the beginning of a free community for educating traders across all parts of the market. So it's by traders, for traders. I lead the project, and yeah, we'd love to see you over there. We've got well over 1,300 people in there now, all sharing their ideas, sharing their insights, their thoughts. So make sure you check that out. And in about half an hour, we will be having the weekly AlphaBeta Lab podcast with LJ and Victor and Rich, hopefully. And yeah, we'll be going through whatever topics may come to mind. We talk about all sorts of things, psychology and those sorts of things. We step away a little bit from the charts. And we talk a little bit more about the psychological side of things and what may or may not impact our trading as well. So come join us for that. Hopefully you'll find that useful, and we'll be doing that in just over half an hour. Mike, some tips on the psychological aspects of the funded challenges. I took my first challenge from the $5ers, but somehow I am scared to hold trades because of the loss limit. Best tip I can give you: go and read Mark Douglas, The Disciplined Trader. Really, I genuinely, when I read that book, it really helped me kind of get a different perspective on things. And it's probably, if I'm honest with you, thinking about it right now, talking to you, I could probably go with going and reading it again, if I'm honest. So
another one is The Best Loser Wins.
Yeah, that is. I haven't actually read that one. I've got it on order. So yeah, I'm waiting for it to arrive, and then that's on my reading list. Yeah. can you suggest one never-ending profit strategy? Doesn't exist. Next.
Next question.
Next question. Moving on.
Question actually about here. Since that market bank holiday, guys, the market is going to be closed at 12 p.m. Central Time, CST time, because it's U.S. market. The market is going to be closed by the U.S. time, and then you need to recalculate it for your time zone. 12 p.m. CST, the market is going to be closed for the halt.
Yeah. GS, there isn't one. Okay, there isn't one. So please stop asking. There is no strategy. Okay, and it's not something that we're going to be able to give you on a live stream here right now. It simply doesn't exist. If it did, we would all be doing it. Right. So we don't know your psychology. We don't know the time you have available. We don't know where you're located. Anything like that. So you need to go and find what works for you, and go and see what makes sense to you. Adrian, the first book that I mentioned is The Disciplined Trader by Mark Douglas. I will pull it up on my screen so you can see what the book looks like. Mark Douglas. You've got The Disciplined Trader, and you've got the other one that he has is called Trading in the Zone. That's the other one. Where is it? I can open this. I don't know if I can. No, I can't make any bigger. This is what they look like. Trading in the Zone and The Disciplined Trader. Okay. Very, very good books. He's highly, highly respected in the markets. They're not big, long books either. So they're not endless pages for reading. So yeah, and it will be as slow as a very slow cat, Watt cat, because the market in New York will be closed. So you'll only have London towards the end of the day. So yeah, exactly. So Trading in the Zone and that one. I don't recommend buying it from AliExpress. This is just a page that I just opened up when I searched for it. So there you go. Gold is still kind of just chopping at the moment. So gold is still waiting, and this is kind of just leading into the point that we were both saying earlier, Anastasiia, that the markets are just going to be a bit slower today, aren't they? Would you hold your trades over the weekend then, given everything that's going on?
Well, it's not over the weekend. Tomorrow is Friday. So market
yes. So it's closed today. But let's say, for example, your trades don't play out even tomorrow for whatever reason. Would you still keep them, or are you just going to wait and see?
Over the weekend, no. I'm not that crazy. No. Like I don't want
She's not that crazy, guys. She's not that wild. Okay.
Like I don't want the market to be open like 300 ticks away with a gap to Trump. No, thank you. Or like if someone launches.
Yeah, exactly. And Maya is quite right. This is what Mark Douglas talks about, is that trading is meant to be boring. If you find trading boring and it doesn't trigger emotions in you, then that is where you can get really, really successful. So yeah, unfortunately we are not robots. So yeah, that's the tricky part. And Mohammed want to learn how to trade Forex pairs. Can you point me to a direction? Yes, I can, Mohammed. I can point you into a brilliant direction. It's called the AlphaBeta Lab. And if you go in here, you can find a whole bunch of lovely stuff all in here. We have a great community already in here. As you can see, we've got over 1,300 people in there. We have contributions from all various members of the community, and we also have free courses as well that you can go and take. We have got Alex's one is currently in draft, but we already have a gold trading system. We have the Foundation to Fundamentals with Dirk. We have the Foundations of Controlling the Monkey Mind with Louise Bedford. We have Technical Analysis with Jonatan as well, which I've just released the 6th and final module for as well. So there is plenty of great content in there. to get you started, I would say. And the community is second to none, I would say, as well. So there you go. Go to the link on your screen, and you can join up totally for free. Doesn't cost you a penny. So there you go. And if that doesn't convince you, then maybe this will, and it will give Anastasiia and I just a chance to have something to drink. There you go. If that doesn't get you interested in the AlphaBeta lab, I don't know what will. As we said earlier, gold, as I said, it is just jumping around a little bit. We have come into a new 1 hour candle. If we go out to the 1 hour, what did it do? The last 1 hour candle, well, it wicked back down. But I still think we're going to come up and take that high before we then push down. What's interesting is if you look at this one, I didn't notice this before, but this wick here is actually an engulfing candle to the downside. So it just adds weight to the fact that this area here is a nice area to potentially look for sells. I'm tempted, just tempted to maybe stick a sell order, something like that, and then look for sells. Potentially. What's that?
This stop loss of yours, even just by being driven, gives me such a rush of adrenaline. Wow.
Because my setup is that this wick acts as resistance, right? That is how I've back tested. And when you look at it on other time frames, it's the same setup. So I would probably, I don't know if I've got the wick right where I'd want it. The entry probably bring it down just a little bit, but there you go. That would be a potential trade, and it might even come in in this 1 hour candle that we've got that's just started. So we'll see how that plays out, but yeah, we'll see. Thing is, guys, set that as a trade, right? Set that as a trade and risk 0.1%. and see what happens. If it comes off, then what's that, a 27R or something like that? So that's fine by me. You know, it's just the way you got to set things up, really. So yeah, I think I'm gonna set this on my MT5 actually. Let's see. Let's put it there, shall we? I think that's a decent place to go. It has that 1 minute candle is an interesting one. It suggests that it wants to leave this, but I'm not convinced. I do think we're going to go higher still. I'm going to be holding for the time being, and waiting to see if this one plays out. What do you think?
Me?
Yeah. You think it's because look, I mean, the guys are saying in the chat, your stop loss is too small. 74 is the pivot.
I think if you backtest it, it makes sense. I like, for me, it's too small, but it's based on my backtesting. You know, yeah. So it's just visually for me is like triggering because it's too, you know, too small. But I do see the possibility that the market is gonna drop from there.
Yeah. I'm just trying to make sure that because obviously MT5 is different to TradingView, but yeah, that's going to be my sell limit. There we go. I've stuck that in. So yeah. The strategy I have, guys, is quite simple, especially on gold, where if you see a setup like this, you just want to see the wick retest it and then sell off. I mean, it could happen in the next 4 minutes where gold can easily shoot up, tag in that area and then sell off. it might not work out. But if I'm risking, I've stuck what 0.2% on that. If it comes off, and that trade goes to take profit down here, let's say even if I took it to there, right, at a 23R, right? I mean, that's, you know, that I'll happily take that, right? Because all of a sudden I'm looking at a 4.6 return on profit. Fine by me. So it depends on your strategy, depends on managing your risk, right? So yeah. Naveen, I don't know what it is you're talking about donations. There are no donations, but thank you. Just joined AlphaBeta Labs. Welcome, Vico. Good to have you. I hope you find value in it.
Look at that S&P 500 though.
That's a beauty. That is a beauty of a trade. Very, very nice. I mean, given the fact that we're in the national holiday today, you confident that it will hit today? What do you reckon?
No. I'm not confident that it's going to take profit today.
Mm-hmm.
But the market in Spain is going to close at 7 p.m. So I still have enough time. Let's see. Maybe.
That is, and you know what? That is the one thing that I pick on it sometimes when people say it in the chat. When people say this will happen or this will happen, it might happen. It might happen. It might not. No, none of us know. But yeah. So yeah. And Omar, if I am the liquidity, then I am $7 worth of liquidity. So I'll give you the $7. All right, of virtual money on my challenge account. So yeah, but we'll see. It's showing a bit of momentum at the moment. It's broken that level that I said might push down from, so it hasn't respected that one. So we'll see. I'm curious. I mean, essentially, this was what I was looking for. It hasn't done it straight away, but that is my expectation, is that we then sell off from there. So we'll see how that one plays out. It's pushing up higher, so it might do it in the time that we have left before the podcast. Anastasiia, if we're talking about the US being closed today, do you think people should just stay away from it for kind of New York Open and things like that, and just leave it?
Yeah, if it's bank holiday, the bank holiday means that your New York session is not going to open.
Yeah.
So I'd say if you're a beginner, just leave it. Like, I'm fully can accept the fact that I might get stuck in it. And I can accept the fact that if I might get stuck in it, it can open with a gap and completely like get back to my stop loss. If you are not really ready to accept it and you will be like, oh, I shouldn't have traded it otherwise, then you shouldn't be in the trade. I think. Yeah. Like, if you cannot fully accept the possibility of the loss because of the bank holiday, then it's better to not trade during the bank holiday.
Yeah. Yeah, exactly. QMLs. I haven't. What do you know? What Anastasiia? What's QML is? What's a QML?
No.
Sorry. So no, I don't trade QMLs because I don't know what that is. So yeah. King. Sorry, I did see this earlier. For back testing, personally, I think you need to find. I mean, a lot of people don't find backtesting useful, right? Because backtesting, all it does is it proves that your strategy may or may not have worked in the past, and doesn't necessarily mean that it will work in the future. And it also doesn't give you the psychological edge over the live markets, right? So backtesting can give you an edge to some extent and give you things to look for moving forward. But personally, if you are going to backtest, I think you need a decent sample size. I think you need to have at least, I would say, 100 examples of your setup to see if it works or not. But that's just me. Anastasiia, what do you think? I can see you smiling, so you clearly have an opinion.
Well, regarding the sample size, I'd say 6 to 12 months of data. At least 3, not less than 3. Like, it doesn't make any sense. You need to see how your strategy performs over different periods of time, months, seasonality, and all of these kind of things. Now, yes, backtesting gives you the information about how your strategy performed in the past. But if you don't do backtesting, you don't have any information. All this forward testing stuff is BS because you are forward testing in a real market, which also becomes the back testing afterwards before you start trading live, which is exactly the same thing after a while. The only things that you did is you lost time on so-called forward testing. So back testing, in fact, is extremely useful. And my one of the breakthroughs in my trading happened because of the back testing. Because otherwise I was all over the place. I was able to take a trade at 6 a.m. in the morning and at like 8 p.m. in the evening before the market closure. I didn't know whether I should have traded or shouldn't have traded at that specific time. I didn't know if I should have traded this asset or not, and didn't realize that on some of the assets I have extremely low win rate, and they are messing up my whole system. And overall, the only things that I should have done is to remove some of the assets out of my portfolio. So without backtesting, you are trading in the blind. With backtesting, yes, it gives you past data, but it gives you the data that you can rely on and then optimize when you actually trade live. Without backtesting, it's like doing this and like pressing a button. You might as well get one of this cute, on Amazon, on AliExpress, they have like a crystal ball, like a ball that says buy, sell, hold, exit. Like, I'm going to get one of this for our lives. I swear, I ordered one. I'm waiting for this to arrive just to for those people who say it's definitely going to go there today.
Like a magic 8 ball. It's like, magic 8 ball. Is it going to go higher or lower? Okay.
This kind of thing. Yeah. That's how you trade essentially without backtest.
Yeah.
It's my opinion.
Exactly. Somebody's asking, can we take this trade for gold? I don't know, Kunal, can you? It's up to you. This is one trade idea. It's just I like the way that it reacted on the 1 minute. I had to look back to see what was there on the 1 minute, and what you do have is you have this 1 minute engulfing candle to the downside. So occasionally that can act as an area for reaction. It's looking all right. It's not entirely convincing, so I still have my sell limit here. I did take a second position, a market position here, just looking at how it has reacted from that one little wick on the 1 minute. This one's a high risk, but it means that I can get a great risk to reward. So we'll see how that plays out. So we'll see. It may play out, it may not. Let's have a look. It's taken that high of the previous, I think, but I don't think actually. No, I think it's just created a perfect equal high. Is it? Yes, it creates a perfect equal high. So if it sells off now, then that's a great opportunity. But need to wait and see the candle close first before being confirmed. But it doesn't look entirely convincing. We'll see. So yeah. Vignesh, sorry to hear that, my friend, but that is not what we do here. So yeah, that trade is invalidated. But the next one that I had, which was this one up here, coming into this area with a stop loss up here and selling off, is the alternative one. That sell limit has been triggered, so we'll see how that one plays out over the course of the stream as well. Here he is, the man himself.
The boss is here.
The boss man.
What's up, guys? How's it going?
He's come to ridicule my stop loss size, no doubt, or something of that kind.
Well, let me see. What's the? Let me take a look. You probably have a ridiculous layout. Look at that. What are you doing, man? Well, I came in here because I thought it was my session. It's not my session. I am very early. So what I'm going to do is I'm going to pop out and I'm going to get back later. I just want to say hi to everyone. And yeah. Always on time.
Excellent stuff.
Yeah.
Good stuff. Good stuff. Alrighty.
I'm gonna be back in a while. Do some live trading with you guys.
You're welcome to join us for the podcast session if you like, Jonatan.
Yeah, I'm gonna try, but going away next week. Got some things I need to take care of. It's incredible what you can do, with your stress levels if you just push everything forward, till like the last days before a weekend. A vacation.
It is incredible, isn't it?
It is incredible. I haven't even had time to look at the charts or anything.
Oh, it's a bank holiday today. You're not missing much.
Yeah,
Alright.
there's not much. There's not much to worry about, so it's all good. Excellent stuff.
Yeah.
If you're here for a second, Jonatan, I'll be back right in just a sec. I just need to quickly take care of something. Give me 2 secs.
Yeah.
What?
Well, I guess I don't have a choice, do I? Be back. Well, how are you, Anastasiia? How are you doing? And how's everyone? Everyone in the comments?
Good. Sapam is saying 20-year-old young energetic guy named Jonatan is back.
Not only energetic 20-year-old, looking like a 20-year-old as well. Almost. Should have shaved today though. Like I'm looking. I don't even have time to shave.
Okay,
there we go. That's him. That's you. Nice. That's you. Well, okay. I am now sorry for everything that I've ever said about you losing your 100K account. I feel that is terrible. That is terrible. Everything is okay between you and I. I wish you all the best. Wish you all the best and everything. Everything. Wish you all the best and everything for you, my friend. Any questions? Any help that you might have in trading? I'm here for you. I'm here for you, man.
Look
Jonatan,
how
Jonatan, you're so fickle.
like
Jonatan is so fickle. It's so easy to manipulate Jonatan. Really, Jonatan, you got to make it harder for people, Otherwise, it's just too easy for them.
Yeah, missing the hats. I do. Where's the hat? No, I don't have the hats here anymore. I wanted to say something. Yeah, a lot of viewers today. Very nice to see. Very cool to see. We got a lot of viewers. Thank you everyone for tuning in today. I really do appreciate that. For some reason, we had like a massive spike. A massive spike in viewers a couple of minutes ago. Went from like 300 to 400. So I think we get a lot of new viewers coming in here. And welcome everyone to the 5ers live trading room. I'm not supposed to be here, but I am here sometimes. And I'm going to be back in a little while. Do some live trading with all of you. Another giveaway. Should we do another giveaway? You know what? Maybe we could do a giveaway just because of the nice comments that we're getting. The nice comment. Where is that nice comment? Where is he? Yeah,
that's
it. Comments like this, comments like this definitely deserve giveaways. So I'm gonna think about it, guys. I'm gonna think about it, and when I'm back, yeah.
Oh, look at that! You're just putting Jonatan in a great mood, guys. Putting him in a great mood.
It's always Anastasiia getting the comments. I'm never getting the comments. And now, look at this. Look at it. This is the comments that I'm looking for. More comments like this to me, obviously. Then we might be doing something here.
Yeah, exactly.
Yes,
And that's my age, Roshan. It's my age, is my shininess. Somebody came in, turned the lights on, and so it's screwed up the lights. So yeah, I need to get better makeup on for next time. My apologies for the shininess.
All right, guys, we're let's get those likes up. If we can get a good number of likes up. Yasin deleted that comment. Yasin, you can't delete that comment. Like that's that comment that says like so hot. That's to me. You know what I mean? Like, I thrive on comments like that. You can't remove that. That's why I'm here. I'm trying to get all the attention that I can. Okay, so yeah, I'm gonna be back in later probably after the ABL session. We're gonna do some live trading with you guys. I'm gonna be watching in the background. I really do enjoy watching you, Mike and Anastasiia together. You're a really good team. Your analysis together, really awesome. And I'm happy to say also that when you guys are together, we're getting the best views. We're getting the best views. And then I come on, and then we're getting slightly better. You're definitely the dream team of the live trading room here. I'm very happy to see that. Okay.
Well, there you go.
I'm gonna
What can
leave.
I say, guys?
See you guys later.
See you later, buddy.
Thanks,
Have
Jonatan.
fun. That gold trade, the gold trade was invalidated, but that's okay. That's all right. It was $7 loss. That's fine. I don't mind. I'm still biased short on gold. Next opportunity I think is, I'm just looking at the charts right now to see where would the next B area be, and I think it's probably in this area here, which would tie in with the 67, sorry, the 67, the 76.40 area on this fib move down. There is various areas of liquidity in and around, but yeah, that is where I think we are maybe next going to have an opportunity. So yeah, the thing is that I don't need to be right loads of times to make profit with these kind of stop losses, So
That's
just need one, and the trades can play out nicely. I'm just seeing if that is genuinely a valid area or not. The only thing is it was tapped out, so this one feels less valid. We've taken that one now, so we'll see. Let's see if we've got anything on the 1 minute. Just looking for something on the 1 minute as an area of interest. Possibly this. Possibly this area here on the 1 minute. It doesn't look as convincing on others, but it does look all right on the 1 minute. So we'll see. We've got a level there as well of major liquidity. So that would be my next trade idea. Again, looking for something like that. Stop down there and selling off down to there. And all it means is that actually the risk to reward ratio just gets bigger because my TP is still the same. That is an interesting reaction right there, right now.
Now let me switch quickly to this. We are getting this reaction on gold because it reached the developing point of control of the week right here. So for delta, and if we get the volume to see how the volume was distributed, how the volume was distributed over this whole move to the downside. Wait a second, this is not what I'm looking for. I'm looking for volumes. We are basically getting the high volume node right here that the price is trying to react from. So it's either for me this right now sell level, like from the current level, or only after we reach the previous highs here. So 34.05. But quite possible that we're going to get the sell right now. So we see that the footprint becomes dark red as well compared to the move to the upside here before, where we almost didn't have any liquidity. Yep. So now we have lots of volume stepping in the market, and majority of it is bearish. So quite lots of market bits hitting the market right now.
Yeah.
I'm going to switch back to your chart with your trade ID.
Yeah, so this, if we see a retest of that wick, this one here, and we hold that high, then that is another nice entry. It's not in a zone that I would have necessarily looked for on the lower time frame, but it is an interesting zone on higher time frames. So it's still validity to it. So we will see. It's got this nice area here within this wick, for example. So let's see. Ideally, I want to see that wick retested though. And the way you can look at it is you can either do a high risk entry of setting a sell limit here, or what you can do is you can wait for the wick to retest on a market order, and then you try and get in when you see that it's retested and it's closed. It's one or the other really, but obviously the better the risk to reward if you do a retest of the wick. So yeah. As far as trading with the 5ers is concerned, it is CFDs, but Anastasiia does look at the futures markets for her analysis.
I analyze the market and I trade both futures and CFDs. So, for example, when I trade with the The5ers, I just transfer the same levels into the CFDs. But I look at futures because that is a centralized market and it has an ability to tap into something like this, for example, where you see all the bids and asks and all the orders that have been executed in the market. So everything that is everywhere in the market, no matter the big traders, small traders, no matter who is entering the market, you can see those. And you can analyze things like, deltas and imbalances between bid and asks and cluster volumes and all of this kind of things, which are not available in the Forex and CFDs because it's a decentralized market. And the only liquidity that you can see is basically from the broker that you're using. But I do trade, for example, with the The5ers by the same principle. I analyze it here. I trade it with the The5ers, and it's not a problem at all. The only difference is that there is sometimes a small difference in prices, but you get used to this. If you get used to, if you can get used to this, you can also, analyze higher, like deeper information in the market as well, which is extremely helpful. Like, for example, the trade that I have now on S&P 500 is based on the futures, right? And the order flow. So we had there here, we had the reaction, and then that we were looking with you, Mike, the market, there was imbalances on the bid side in this bearish candle, which were my trigger and extra confirmation to enter sell, and is right now running profit for me. So the Hatman. Where
the Hatman is back.
It's the Hatman. I'm sure there's a song to go with that.
Scatman.
Scatman. That's it. That's the one. Yeah, that's what I'm thinking of. LJ jumping in reminds me that it is time for the ABL podcast, which means Anastasiia is leaving us because she never joins us for the podcast, even though she keeps promising that she will one day.
He's kicking me out.
I'm not kicking you out. If you want to stick around for the ABL podcast, we will happily have you stick around. But you always leave, so no matter how many times we ask you to stick around.
Let's do this. Wait a second. Let's do this. I'm going to stick around for the podcast next Thursday.
All right, there you go. Jonatan, you heard it here first. Jonathan's in the background. He can hear it. He's not paying attention, but we're going to pencil you in. All right, okay. So we're counting on you for next week. All righty, cool. Lovely to spend the morning with you, Anastasiia, as always. Guys, we'll be right back after this with the ABL podcast. No, we won't, because Jonatan's got something to say.
Nice. I'm waiting for the ABL live trading session. Let's go.
Jesus,
Go.
What are you waiting for?
Such a swing trader. Right, let's go.
He's an adrenaline before vacation.
Exactly.
All right. One, 0, let's go. Disclaimer, not financial advice, guys. Not copying us.
There it is.
We have Jonatan here for the podcast. I love that intro.
That intro. I know you've got intro envy, haven't you?
No, I think ours is much better, but I like that one. That is good. I think that's a really good intro.
I disagree.
Never admit it.
I'm trying to think what's the best way for this segment. I don't know. We know that everyone wants charts, so we've got the charts up. So I don't want to upset Jonatan's viewership, so the chart is up. The trade is probably not going to work out. It probably is going to tap into that area that I was talking about earlier, but we will see. It gets you excited every time. Exactly.
This is interesting right here. We got something to talk about right here. We're looking at that chart right now. We're looking at price getting close to that stop loss. Like walk us through the emotions that you're feeling right now, Mike. Like, you're in a drawdown, you're going to get stopped out, you're going to lose money. How will you feel? What's the thought process like? How do you prepare for that stop loss being hit?
I'm like, oh,
because
okay,
I mean,
whatever.
let's be honest. I'm not saying that it will hit, but it looks like it could. So we kind of have to prepare for that.
It does look like it could. So the risk that I took on it was 0.1%. So currently I'm in $1 of a loss.
That's massive, man.
So I'm really feeling the pain right now. It's now 36
but honestly
cents.
though, like how
36 cents of not real money. So yeah, no, it's going against me. So I'm closing it now at what, $1.50, $2.
okay.
So
$2.
your answer, Mike, is you're keeping the risk low so it doesn't bother you. That's your plan that you did beforehand to be able to handle the possibility, the prospect of a loss while you're in drawdown.
Yeah. So look, I mean, I've had 3 trades so far that haven't worked out. 3 trade ideas because I saw zones where I thought price was going to react from. This was one of them. This was the second one. There was one earlier that I thought this market reaction here was looking good as well. But looking at it at the moment, it's created this perfect equal high. So I know I'm fairly confident the price is going to continue to push higher. But I've got this next zone marked out with a liquidity level within it. So my next trade idea would be something like this. Okay, but when you look at it as a trade, it's got a 12R if it goes to just the previous lows from early this morning, right? The lows of the day. I mean, if I took it down to there, I'm looking at what's that? A 26R. So if this trade, okay, so I've lost 3 trades in a row at 0.1%, so I'm down 0.3%. But if all it takes is for one of these trades to go in my favor, and I'm up 2.5%. So
one devil's advocate's comment here. Have you? I know it's difficult to have losses in a row, right? I have them too, right? Because my win rate is low, it's below 40 on average. So I know what it is I lose in a row as well, and all of that. But have you thought about what if you look the other direction on each of those setups? I'm not saying you didn't do things right, but have you considered what if did you miss something perhaps? Because what I've noticed is that there is something in my analysis at the beginning. I missed one thing that leads me to go think this is the right direction or the most probable direction. But when I go back and I say I missed one thing that I should have considered, and had I considered that, I would have maybe have at least a more balanced bias in terms of direction, or perhaps even after the first loss, I would have reconsidered and said, all right, maybe I should play both sides, or maybe I should switch sides. Have you?
It's a really good question, Victor. I've been playing around with different things, and recently my psychology is all over the show, as I think all of you guys are aware, and I've openly talked about that. Today I'm trying something a little bit different. I know that my bias is sells on gold. I generally feel that today we're going to see bearish pressure coming in. We're coming into an area. The reason I've seen these sells coming in is because
before you continue, I'm going to stop you. You said
no. Please don't. Let me finish.
Wow, Victor, like that, you're learning.
No,
nice.
I'm going to stop you because you said I know that I want.
Right.
I think
wrong words.
The buying pressure is coming in.
Yes.
Please tell me why. What makes you think that is the
You've
right...
caught me on the semantics. You're right, and in fairness, you're absolutely right, because that was something I was actually saying earlier in the chat myself. Is that it's not that I know, it's I believe that we have got bearish pressure coming in. I believe we're coming into an area there where sellers are going to come in. It's a question of where does that happen. The problem is trying to find, trying to do my in-depth full analysis whilst trading live is, frankly, let's call it what it is. It's crap content, right? It's absolutely rubbish. If I was to sit here and go through all of my timelines and mark out my charts and look at the full analysis, you wouldn't have the viewership that Jonatan so greatly appreciates, right? Has temporarily vanished, likely in pursuit of this. He's also probably going to get his GPU. But the way I'm looking at it is I have done an analysis overall on where I believe price is going to go. And so then what I've done is I've marked out, based on that analysis, where are the most likely reaction points, okay? Because if I try and do a full in-depth analysis of every level, then, as I say, I don't have the time, and B, people are just going to switch off. Nobody wants that, right? As much as people might say they do, they don't. So yeah, and percentage, it's not about doing the prep before you go live, because I have been live since 8 a.m. GMT this morning. So when you would like me to do that do that prep when I have 2 young kids that I have to drop off to preschool and do everything else, I'd love to know when you want me to do that. I'm trying something out here. I don't know if it's going to play out or not, but the idea is to try and trade in zones with low risk. And if my bias works out, my bias works out. If it doesn't, it doesn't. But that's kind of where I'm looking at it, is trying to adjust not only to the markets, but also trying to adjust to the circumstances in which I'm trading the markets.
I want something when you're. I want to do an experiment here, guys. Okay. You all know the thing that, you know. What did Einstein say about explaining concepts in a simple way? He said something about, if you can't explain an idea to a 12-year-old, then you don't really know the idea, right? Something like that, wasn't it?
Possibly. It sounds familiar, yes.
I think Victor should know, right? You know Einstein. Seem like the right person to know what Einstein said.
I'm flattered.
Like,
LJ is Googling. Like, he doesn't know. He has Googled this.
I'm flattered for that assumption, Jonatan.
Like,
I would love for everyone here to each of us, right? Everyone, go through, try to explain our trading system in the most simplest way, in just a couple of sentences, right? Just the most simplest way, but make sure that people that actually hear that sentence understands the way you're trading, not just press buy win, but like in a way where you can actually explain your system in maybe 2 or 3 sentences. Who wants to start? And before we start this, I just want to say that we had a comment saying that the last session we did, Rich was cut short after his introduction. Yeah, exactly that comment. And this fine gentleman is saying that we should give Rich enough airtime today, please. And I absolutely 100% agree with that, because Rich, as our performance coach here at The5ers, the whole idea really with these sessions was to be able to give Rich, because this is his only hour in the live trading room, and the idea is to really give Rich the opportunity here to share some knowledge and wisdom on the performance coach that he is. And you haven't said a word, Rich. So
legend. Look, I'm sitting here quietly. I don't like to interrupt people, but I do have a thought. I'm more than happy to share my system. I'll do this in a sec. Can we get a poll for a very, very simple question? Now, disclaimer, it's a very triggering question, but it's going to challenge a core belief system that I think every trader needs to have some kind of awareness about. So let me just quickly add, hang on. Oh, I don't have controls to add you to the screen. Can we get a poll in here? Are you able to do polls on this?
Yeah, definitely.
Yeah, okay.
Jonathan can do whatever you want.
So we can let this poll cook. whilst we all run through our trading system. Now, the question is, do you need to have a bias to make money in the market? So it was something that Mike said earlier when he said, I just need to get my bias. And if my bias is right, if my higher time frame bias is right. And I want to directly challenge this. So if we could get a poll and just very, very simply just get traders to say, yes, you can make money from having a bias, or sorry, no, you don't need to have a bias to make money, or you need to have a bias to make money. It's a bit of a hot topic at the moment, and it's one of the things that I don't often hear too many traders talk about. And I would be curious to find out, what are people's belief systems around this? Because I think there will be people in both camps. I mean, obviously, a lot of traders aren't in a position of making money, but those that are, and I'll be curious to hear what their thoughts are. So whilst we get that cooking, simple trading system. How do I trade? Very simply put, I use market structure, I use breaks of structure, and I use runs on liquidity. I call it simple supply and demand. I can show you examples of it in seconds. The problem is, if I pull up my trading view, it's going to lag. But you guys saw the longs on GU and EU. And if I'm right about trade, I'm right about my entry. That's typically how my system plays out. So simple supply and demand, breaks of structure, liquidity. I took, I think it was ICT 2022 mentorship, spent 60 hours working through it, went to the charts, and then just started to find my own way to make this system work for me. And in all honesty, I dropped pretty much all the concepts because I started to notice how price would perform based on supply and demand. And so after that, I just decided I'm better off to make my own system. So bias or no bias? This is what I'd be curious to hear. How do you guys trade?
Yes, I got the comment. I got the poll up. So yeah, we have the poll up. So make sure you go. It's like 50-50. So that's very, very interesting. Okay, so how do I trade? Okay, so let's try to explain it in a very simple way. Okay, so what I do is I look at the higher time frames, which is the 4 hour and up, or the daily. Find the key level. When price hits that level, I go into the 1 hour and lower to look for a break of structure to confirm a trade. If the daily comes up to daily resistance, I zoom into the 1 hour lower and I look for a bearish break of structure to go short at that high time frame resistance. What's that?
I didn't hear break and retest, but it's a marvelous explanation, I think.
I mean, the break and retest is a component within the strategy, because when you have the break of structure, then the break and retest comes in on the retest of the level where the break of structure happens. But you don't need the break and retest. You only need to get some type of confirmation of, like, you have an uptrend into high time frame level. If that uptrend breaks into downtrend, you now have confirmation that the high time frame level is acting as resistance or support or whatever. Speaking of that, USD/JPY is breaking out right now, breaking out like a low time frame structure. For everyone who, hated me for longing USD a couple of weeks ago, look at USD/JPY. Now, who has a reclining hairline? Well, you do, because you're not long USD/JPY, and the stress is going to eat away. The stress is going to eat away.
We have one Will in the audience having a very sharp comment here on your explanation to the child.
I can't. Okay, let me explain that in a very simple way. Okay, imagine a staircase. Okay, imagine a staircase. At the beginning of the staircase is support. At the end of the staircase is resistance. Okay, when you walk up the staircase, you walk one. What is it called? Like one step. Thank you. One step at a time. You walk one step at a time. If for some reason the staircase is just losing its step and all of a sudden you fall down, right? You fall down. You break the structure. You go from uptrend, and then all of a sudden you fall down, because all of a sudden the staircase is now going down. When that happens, when you tumble down, that's the break of structure. That's when you are going to short, basically. I think
just
I think
visualizing
that's
someone
actually
just going straight to the top of the stairs, falling down, hitting support just by smacking onto the floor. Just crash.
yeah. Imagine jumping down the stairs. Like that's the breakup now. But I think that's a fairly good assessment, though. Like I because if you imagine you're standing at the top of a staircase and then you're dropping a bouncing ball, and the ball is bouncing on every step down. That's a downtrend, right? And I like explaining trends in trading with bouncing balls and staircases because I tried explaining this to my 7-year-old and my 14-year-old, and it's like it kind of.
Did they understand?
They did kind of understand because I asked them to draw a trend line. Draw an uptrend, and they just went like this with the bouncing ball motion. I'm like, yeah, that's exactly what an uptrend is. So if you can now draw a line between connecting the lows and the highs, now you have a trend line, and now we have a trading trend. So whenever you see that, you buy. It's yeah.
So basically, you change the word when you're talking to a child, or to the child in each one of us.
It could be it doesn't have to be a child. It could be like a trading student as well, you know.
But that's what I mean. The child in each adult listening, you change the trend, the word trend, for a staircase. And when the staircase is no longer a staircase in the same direction, meaning if it changes direction, it's no longer a staircase, right? A staircase either goes up or down. It cannot go flat. And it cannot change direction because then there are two different staircases, right? So when the staircase stops being a staircase, that's a break of structure.
Yeah. Yeah, pretty much.
Can I share screen? And I'll give you a real quick visual example of this.
Depends on what you're going to be sharing, but we'll add it and we'll see. Yep, that's all good.
All right. So think about structure. Okay, in an ideal world, this is how structure moves. Pretty much just legs up. Now, when I look at structure, I look at the high, I follow it back all the way until I find the move that made the high. If the market can break this level, this is a break of structure. I think I'm lagging. I don't think my screen will share. It legs up, makes a new high, I follow it back. This would be the low. This is the break of structure. So all I'm waiting for is the market to effectively knock out the move that made the high. That's a break of structure. Really, really simple rules-based system. You can follow it back by following this leg until you find a bearish candle that made the low, and then you just look for the move that made the high. Super, super simple. So you've got structure, which is just knocking out one of these lows. You've got order flow, which is pretty much looking for the first sign that the market makes a lower high, which I think my screen's struggling because I'm on two different browsers.
I can't hear you.
But this is how I would mark break of structure here, by knocking out a low that made a high.
Yeah, fair.
The elixir of life is calling. I can hear it and I can smell it. The fuel that we need. Traders, fuel. I'll be back in just a moment.
Mm-hmm. I would say, as far as my one-liner for stuff, I guess I'd put it as text plus technicals plus macro harmony equals EV equals edge in the simplest
EV?
form.
What is EV?
Expected value, right?
Okay.
So it basically works out to your probability of success or a loss, and then also the rate of return per that probability of success, right? So that would be your risk reward, and then that gives you your edge.
All right, I'm going to that is very, I think that is, although technicals to the child, I think you need to explain that a little bit more. What do you mean by technicals?
That's hard to put it into one line because I've got a multitude of technical structures within the larger macro framework, right? But if I guess probably bread and butter, my most repeated sort of technical outlook is generally mean reversion type strategies, right? So that would probably be bread and butter, or the sort of key kind of core component that I'm looking for. So that'll either be extension of price in terms of like the ATR, if you've overran that for the day, just a general average expected move, or similarly per like a new macro regime shift, at some point you do lose steam as well and have to come back to gravity. And then that gives you things like your fib retracements, that kind of stuff before, again, whether you want to call it a reload and retest, something like that.
And as a follow-up, macro harmony, what is that? What does that macro needs to be in harmony with the tech, or macro in itself needs to be in harmony?
So macro harmony is just, I guess, understanding the macro side in terms of figuring out those technicals. That's going to help you determine whether something is overbought or oversold, right? At least with a better confidence level, and will also allow you to capture those times when something might be perceived as overbought, because the current regime that we've had has been, pretty by the by, nothing new really changing, no new information. You get that new information, which is significant, and then you can get large, shifts in the market. A broader example of that would be identifying before it comes through, say when you have a downturn in the stock market, a bearish run, not necessarily crash, but you just get an extended period of, down 10, 15%. And then also being able to identify when the turn up for that is, and you're back into that supportive environment.
Before I think the last question, I would want to, you put the tech before the macro harmony. Does that mean that you first look at the technicals, then you're going to look if there's macro harmony, or is it the other way around?
So it's a little bit of both, because I guess tech first, because at the end of the day, tech is still going to be the technicals of what you're going to execute on, right? That's going to give you your entries, your exits. The macro side of things generates, I guess, the initial idea, the initial like food for thought, and then you kind of come back to text again to then see, okay, is this lining up? Are they in harmony? Hence, right? And so if you're seeing that compatibility, then you've really got something. And with that, though, looking at the text, sometimes what should be happening or communicated through the macro environment might be, the text might be telling you that either the market isn't really acknowledging it right now, or is willing to put it aside, or etc. Right? So that's where they kind of go back and forth like 3 or 4 times, like a couple of serves of tennis, and then you basically, score the point.
Understood. So does both of them need to be present for you to have a valid setup?
Not always, because in terms of, say, for instance, with the macro environment, like you can have periods where it's just like, dull, in such that, there's no new news flow. We're just in a by the by period. The Fed's on pause for a long time. All the data is very consistent. We don't have any geopolitics or crazy headlines going on. So it's definitely not the current scenario. But during those periods, you can just have a steady, say, portion of the business cycle, in which case you just keep leaning into that. And then so at that point, it's all basically technicals, right? But you still do have the backdrop of knowing that that's because the current macro environment is just status quo.
Understood. Thank you, LJ. I think that's very illuminating how you think, which is quite layered, and I like that because it reflects the complexity of trading a lot. We have Bank of England coming out in about 5 seconds with their rate decision. In the meantime, I'm going to answer, or maybe Mike, you want to go first?
No, Victor, I want you to answer, but with a caveat. You're not allowed to use quasis. You're not allowed to use order blocks.
Good. I like that. I like that. I'm going to answer the question how I trade. Very, very simple. I can
how are you not supposed to, like, if you this is going to be interesting, because how are you not supposed, like, how you do trade with order blocks and quasis, so I don't know how this is going to go.
Yes, so I'm going to say it's very, very, very simple. Just 2 things, 2 steps to it. I put on the mask and I click or buy or sold, and that's it. That's my strategy. That's it. Very,
the
very
mask is
simple.
the edge. The mask
So
is the edge.
I'm gonna start a business selling these masks because I want to help the trading community have their own edge. I mean, their own mask.
Jonathan, are you trying to time him as to how long it takes him to summarize it? I don't know what. This lovely coffee.
This is coffee, man. Look at that beautiful black gold right there.
And this is roasted coffee beans ground by yourself?
No, I do have a lot of ideas, especially when it comes to buying things, and buying the coffee roaster. Definitely one of those ideas that it's cost me a lot of money, like 100, like a lot of money, and it's just standing in the basement now. I've been doing that for a year.
Just like the graphics card that you got, which is just sitting there as well. Is that going to be a year?
The graphic card is something I'm going to install. I needed. The coffee roaster though is like. So no, this is it's nice coffee though, but I've ordered it. I have not roasted it myself, unfortunately, and it's really difficult to roast your own coffee as well. So yeah, if anyone is looking for a oven, like a small oven to roast your coffee, about $2,000, and it's yours.
There you go.
All right, now, on a more serious note, if I were to explain my strategy to anyone as simple as possible, I would say this: I am looking for patterns in the way price moves that will help me identify where it has a high probability of have a reaction, and I wait for that pattern to emerge, and I'm only interested in getting that reaction. That's one thing. Plus, I use higher time frames and lower time frames because I understand that higher time frames reactions and patterns are bigger and more potent than a lower time frame. And I marry all of those things together: higher time frames and lower time frame, not to say top down, and patterns that I believe, and I know because of data, but which I believe that will cause reactions. And I'm here to catch these reactions. That's it.
Okay, so now obviously people are asking, well, what are those patterns?
Exactly. Well, I can't explain. I will try to say without mentioning quasi and order blocks. Let me try. I use 2 patterns. One is an candlestick
you don't
formation.
have to, man. Like you don't have to.
Candlestick formation. But it is. I think it's a very good challenge. One is a candlestick formation that indicates to me that one side has taken over. So there is a change in who is in control. That's one thing. And the other pattern is a more elaborate pattern that indicates that the trend has changed.
That's actually, you know what? That last part you said, I think that explains everything. You're looking for that candlestick that is telling you that one side is stronger than the other. I think that kind of encapsulates most of your strategy, just that sentence. Because that's most of the analysis I've seen you done. You talk a lot about how one side being stronger than the other, and then when you look at the engulfing candle or something like that, you could say that, okay, one side is stronger than the other, and you want to follow the momentum of the stronger side, if I'm not completely mistaken.
What's what about Rich's question at the beginning with regards to these? Because Victor and LJ have both talked about their strategy, let's say, but neither of you have mentioned about bias necessarily. Just going back to Richard's
we can look at the
point.
poll. We have 155 people have voted, which is way too low. Guys, get into the comment section. Start voting on the question that we have right now. It says that 67% says yes, having a bias is essential. I'm quite surprised by that number. 33% say no, you don't need to have a bias. Very interesting. So there we go.
Hey, when you say surprised, like, why are you surprised by that number?
Like, I don't know. Like, you know what? Like, I have no idea what you're gonna say about this, Rich. I don't know what the right answer is. I'm supposed to know this. Like, I'm a trader, all of that, blah blah blah. So I'm supposed to know this, right? But do I think that you need to have a bias? Like, we have to define bias. Do we mean a bias in what direction we think price is going?
Mm-hmm.
No, you don't need to have a bias. Absolutely not. All you need to do is you need to follow whatever the system is telling you. Like, your bias should be that you know the statistics of your system. You know if the return is skewed to the positive side or the negative side, and then you just follow that system. Your bias is just you thinking that whatever you think matters to the market. The market doesn't care about whatever you think about the direction of the market. All the market is going to do whatever the market is going to do. It's just your job to follow whatever the market is doing. So no, absolutely not having a bias it's not essential. I hope you would agree with me here, Rich.
Well, hang on. So looking at the poll, 64%, that's 2/3 of the audience in a vote of nearly 200 traders have said, effectively, they've said, you won't make money unless you have a bias. Because the question is, do you need to have a bias to make money in trading? So 2/3 of the traders here have a belief. Okay, remember we talk about beliefs affect emotions, affect, actions, triggers, all that kind of stuff, right? So think about 2/3 of traders have a belief that unless they have a bias, they cannot make money out of the market. And unless their bias is correct, they will not make money out of the market. So we're never going to know, and this is the cool bit, right? We're never going to know exactly what is the mathematical correct answer. What I can tell you from my experience is I have never had a bias. In 7 years of trading full-time, I've never, ever, ever looked at the market and had a bias. I've been profitable for over 4 years. Never had a bias. Don't care about bias, don't look at bias. Now, that doesn't mean that certain systems don't strive really well with a bias. But the characteristic of my system is that I'm looking for, as Victor said, very key reaction points in the market: volume, order flow, change of character, who's in control of price, where does that control shift, have we ran liquidity, is there trap volume? I'm looking for very, very key significant price points in the market that I anticipate a reaction or a reversal. And I'll see reactions or reversals over 80% of the time when I backtest. And I have backtested and forward tested thousands, if not tens of thousands of trades. Just one of my accounts has over 4,000 trades. And that's one of the accounts with the 5ers that I trade. So I've had an opportunity to see thousands, if not tens of thousands of opportunities where having absolute zero bias in the market has made me money. So my edge comes from, and this is where we talk about the characteristic of your strategy. Characteristic of my edge comes from being right about my entries, not the bias. Because effectively, if I had bias, I could click buy and sell at any price point, and I'd just make money, right? If my stop was wide enough. My edge is I have to be right about my entry. So typically, we're talking much, much tighter stop losses. So it's just a different perspective on price. It wouldn't be fair for any one of us to turn around and say that we must do it a specific way, because there's so much characteristics to trading that makes it personal, that makes a system and make it work. But that's my that's kind of my stance on it. So it's just interesting to challenge the thought that 2 out of 3 traders believe they need a bias to make money. I believe you can create a bias and make money from having a bias, but I also think you can make money outside of having any kind of bias. That's my personal belief.
I think it's definitely one part, like semantics around, like, do you need being the key portion of that. So hence I would definitely say no. And then overall, I think for majority of all kinds of strategies, you don't, right? The only one where you might, if you're a purely fundamental macro trader, say particularly investing and all you do is macro, you do by definition have to develop a bias. That is like the whole point of it. But as far as the actual trading portion, no, not at all. You don't need one. A good example is like options, right? You can buy way out of the money options, which have a asymmetric return profile, and you can be completely wrong on, basically everything. Take an L on 98% of all trades or something, and then 1% will just make a little bit, and then the other 1% you clean up. You can clean up like 15,000%, etc., in one go. And there's heaps of strategies that do that constantly, and they're trying to find those kind of mispriced opportunities, and they don't care about why or what the thing is. They just go, this is the appropriate, value proposition for that, and they just buy it anyway. Completely irrelevant to what's going on. And then eventually you get something like COVID or something that hits, and then that makes up the past like 8 years or 9 years worth of gains, for instance. So
there are a lot of different biases in trading, and I haven't really heard about any positive bias. I mean, there's like conviction bias. There's a lot of different biases. Like, for example, some people tend to have a bias depending on the first information they read or the first idea that they have. That's your bias, and it's difficult to change that bias. I've never heard about a specific trading type of bias that is positive. All these different types of biases are always going to be like an issue for traders, and it's a lot of times, most of the time, it's emotional biases, right? Maybe you own a specific product and you're going to invest in that company that makes that product, and you have a bias because you really like the product. Even if the company is not doing well, you might still be invested in that company because you own the product. Maybe you've held the position for so long that you have an idea. Like, for example, my USD/JPY trade, I've held it for a couple of weeks now, and let's forward 1 month, and I see that the trade idea might not be working out as I have expected after a month, but I'm still holding the trade because I'm not conditioned to be long on USD/JPY, and I really want that idea to work out, even though all the evidence is pointing to the direction of me having to exit that trade. So I think there's a difference between bias and conviction, because I do feel like in trading we need to have 100% conviction in what we're doing, as long as the idea is confirmed. So there's this saying that we need to have strong convictions loosely held, which is a really good saying in trading, right? I am convinced that USD/JPY is a long for me because I am not seeing any technical reasons to be short on USD/JPY. I'm 100% convinced that the right decision for me to do is to be long on USD/JPY. If we break below, let's say 142, and we break below the last swing lows on a daily, I will be 100% convinced that the best thing to do for me is to exit that long position. I'm not biased in either direction. I'm just I'm just fully convinced that what I'm doing is the right thing to do according to my system and the technicals.
Yeah, I think
sense?
yes, but I think we need to make a distinction between psychological blind spots that are called biases, like in perception and cognition and things like that, and a technical bias, right? A technical bias means that based on certain technical indicators, you assume that there is a higher chance of something going in one direction than the other one, right? So I think there's a little bit these are two, to me at least, they're different kind of things, even though they're both called biases.
So you're talking about biases from a technical point of view, and then behavioral finance biases, basically. Yeah. So, yeah, sure, but that
it's like a semantics thing, right? Yeah,
it is.
There's a difference, but I mean, I remember, when I started for CMT, like a whole chapter was on the biases in the finance behavior, and that's a curriculum on technical analysis. So those type of biases, I would say it's the same. It's the same in the technical biases as well, because a technical idea, you can still get initial information from a technical idea and have that initial bias on that idea. But then when it's invalidated from a technical point of view, you might still be blinded by that first initial bias that you have. I can't really explain it in a good way because I can't really honestly remember what all the different types of biases were named. But
if we just think about a technical bias, we would be talking about I'm bullish, I'm bearish. And most of the time traders will go, oh, I'm bullish on, I don't know, UJ. And they will hold on to that bullish bias and they will just keep trying to buy regardless of what the price action does. And that's where we have an emotional bias attached to our technical bias. But the technical bias, and if you have a stop loss that you keep pushing further and further and further away, it's because your emotional bias has overridden your technical bias. I put my stop loss in a place.
I think it's the same. I think technical biases and emotional biases is the same.
Think they're separate things?
No, because it depends on if you're trading fully systematical, like if you have a fully systematic system that you're just following and maybe just trading automatically, you can't really have any technical bias. You can really only have a technical bias if you're trading discretionary. And then if you're trading discretionary, what you see with your eyes is the bias, and that is because it comes from the visual senses, that it's going to affect our emotional side of things, and it will become an emotional bias. Like a technical bias would be if I get a spreadsheet with numbers and a probabilistic outcome, and I could look at that and say, okay, that's a technical bias. But still, looking at the charts from a discretionary point of view, there's no doubt it's going to be an emotional bias from my perspective.
I'm gonna.
Yeah.
Go ahead.
I was just going to say, I think even looking at technical stuff, you can get bias as well. There's heaps of bond traders who blew up in the default from Russia around, 1998 to 2000 kind of era, right? Where they're all looking at that stuff and saying, oh, it's way oversold, this is ridiculous. It wouldn't make sense for them to default. They're basically like at default value per the prices now. And then they just kept going lower, and then they fully blew up, right? Because they were so convinced and had such conviction in that technical aspect and systematic approach that they had done for the past 20 years or 30 years. And they'd made, maybe 60, 70, 80 million for the banks. And so they were convinced that every time I've done this over the past 3 decades, I doubled down, I did this thing, and it's worked out. I've made all this, I've made a killing. Then within that span of a year, they lost the entire amount of money that they've made for the banks over the past 3 decades, like that, right? So I think you can still have, and that would become, because that would end up going emotional bias, because you're seeing something that is now new to the data, but you're going too heavy on the raw data, when clearly the price in front of you is actually saying, no, chances are your data is actually now changed or is wrong, right? And then so how do you pick up on that?
I would argue that a technical bias is when you correctly follow the technicals of your system. So let me give an example, right? In 2022 or around the end of 2022 and the beginning of 2023, I saw that the system that I've been trading since I started trading was basically not performing as well as it had in the past. And I started fearing that most of the money that I made during the pandemic time was because of the pandemic and not because of the system being robust enough to function in all different markets. So I had a technical bias because I followed that system. But when the system showed signs of not performing well, I stopped using that system. Still having a technical bias, I followed the technical bias. Now, if that technical bias, now I'm kind of contradicting myself here, but it makes sense. Now, if that technical bias then would turn into an emotional bias, then I would not have stopped using that system. So a couple of minutes ago, I said it's the same thing, but if you put it that way, then you could look at technical bias as being logical and actually following the signs of the system, and then you wouldn't really make the mistake of following a system down into drawdown. You would actually understand when it's time to change system or stop using it. So I think when that emotional emotional bias kicks in, that's when you stop looking at the technicals, right?
Now,
did I just explain to myself that why I was wrong earlier? Maybe I was.
I think we need to make the
what
distinction.
You're saying makes sense, but I guess I was saying, like, how do you know that within your technical thing that you've constructed, you haven't, without being fully aware, perhaps built bias into it without fully knowing? Do you know what I mean? And thinking that it's fully technical, fully based on this and that. But obviously, you are a biased individual, and then that implements into it. Right? I don't know if that makes sense.
The thing is that the distinction that we are trying to make between the technical bias or the market bias, right, based on technicals and perhaps even fundamentals, that is a positive thing. That is us trader recognizing, interpreting things, information, data, indicators, that one thing is more likely to happen than other, right? That's a market bias. But when we talk about psychological bias or cognitive bias, we're talking about something that is negative, something that is, you have a tendency to misread or to misinterpret something or to make bad decisions. And that's what that's the distinction. One is a good one, which is the market bias, at least if you did your homework well and you're based on data. And the other one is a tendency to distort or to do wrong decisions, right? Like confirmation bias or recency bias. Because I won last time, I'm going to win again. That's a wrong kind of way to think about things, because it's not based on data. It's based on an assumption, a wrong assumption, wrong belief, if you want to call it. That's the cognitive bias. That's the psychological bias. That's the negative one. That's what you want to expose and not have. And how do you? And the question you asked, you posed there, LJ, is how do you know you're wrong if you're the one judging yourself, right? So it's very difficult to. And that's why it's called blind spot, because you don't see it until you see it, until someone else pointed out, or maybe you have a way to see. And the blind spots are those cognitive biases, those the wrong one, the negative one, the one you want to avoid, the ones that will distort your decision-making process. How do you spot them? That's I don't know. I think you need someone from the outside or maybe experience to.
Can I hop in?
Go ahead.
Just a sec on this. Just 1 sec. Humor me for 30 seconds on this, right? I've extended it for 30 seconds.
Yeah, of course.
Mike, I need you to jump down to gold on the 1 minute chart, please. And we're gonna run through an example of how we can separate the difference between a technical bias on a chart and an emotional bias. Okay. Now it's really important that we do this before we put on a trade. Why? Before we put on a trade, we don't have as much of a bias. When we put on a trade, we've got money in the market. So Mike, if you put your mouse cursor right at the top of price action on that 1 minute chart. Now I want you to follow that price action back, because we can look at that chart and say it was bullish. So we got a bullish bias, right? So I want you to follow that price action back from the top, and I want you to put a line on the chart at which point technically you are wrong about having a bullish bias. Where would that line be on the chart where you should say, you know what, technically, if price breaks this line, my bias in price action technically has to be wrong? Where would that line be, Mike, on your chart? This is 1 minute chart. Okay? Yeah. So price is all the way at the high, and you're like, wow, this is a bullish market. I've got a bias. Technically, it's bullish. Where would your line in the sand be where you say at this point I'm wrong?
Down here.
Okay. But then, can I just jump in and ask you a question? Then why do you not have the stop loss there?
Because I have a setup like Victor does, where I look for certain areas for a candlestick pattern.
Okay, yeah, that makes sense. Sorry, Rich. Go ahead.
No. And this is the characteristic of having an aggressive, and I call it aggressive, where you don't put your stop loss where your bias is wrong. Now, for me, I put my stop loss where my bias is wrong, and when I say bias, where I'm wrong about order flow. So I will look at price and say, wow, we've got a bullish drive. If we break this area, I'm just wrong about bias stepping into the market. My stop loss goes there. If you have an aggressive system, you can find these little rejection areas where you can multiple times take longs and be wrong, even though you're still potentially within your higher time frame bias of buyers are stepping in the market. That's where we have to reduce risk, or say two attempts at this, and then I'm just stepping out. Now, what I see a lot of traders do is they put a line in the sand, and that line in the sand is a stop loss. But when the price comes down to their line in the sand, because they're in the trade, they build an emotional bias, an attachment, a love of this trade idea, and they don't want to be wrong. And they extend their stop loss past the line in the sand, and they hold on to losses way past the area that they were wrong about their price action idea or their trade idea. Not just that, not just so you might be sitting there in chat going, yeah, but that's not me. I don't extend my stop loss. I used to do that like in the first year. I don't do that now. Well, what about the people that still take longs after the market has broke their line in the sand? We are now emotionally executing on a emotional bias. The technical bias is gone, long gone. We've backtested systems. We know there's no edge there. However, we get married to this idea. Yeah, but look how far it's fallen. It's gone down so far. Surely it's going to go up now. Sitting up at 3 o'clock in the morning trying to short GBP New Zealand on an interest rate decision that's gone 400 pips in about 15 minutes years ago. Oh, surely it's going to drop now, is a horrible way to trade. And I can tell you that firsthand. It is an absolute disastrous way to trade. So like we can separate technical bias by, before we get into a trade, say, where am I absolutely wrong about my technical analysis? And you might have multiple entries before that technical analysis, but when that line in the sand is hit, we need to recognize, and it's emotional awareness, we need to recognize that our emotional bias is keeping us wanting to execute on that trade. We were wrong 3 times about a long. Now all of a sudden we're taking longs way below where the order flow has shown that it's gone bearish. So it's just a little exercise that we can do before we put on a trade, mark a line up on the chart and say, at this level, I'm just flat out wrong. And then trade your edge right up until that level in whichever framework you come up with. But when it hits that level, recognize that anything you do thereafter is an emotional bias that is taking over your ability to execute on your technical plan. And that's most of the time, that's where traders will fall down. It's just separating, this is my plan and this is me being an idiot. And I say that kind of jokingly, but we all have to navigate those emotions that will constantly want to keep executing in the market. More trades, they're not good. We pay spread, slippage, commissions, and swaps every time we get in. So we need to execute with it.
I need you to do like a very long podcast, and I need that when I go to sleep at night, because honestly listening to your voice explaining this, it makes so much sense. You get a bright future here. I would like to, I know I can't tell about the things that we're working on in the background of the 5ers, but yeah, very excited about the future. Very, very excited about the future.
I want to say that
as well.
Here, every week here.
I want to say, go ahead, Ajay.
I was just saying, people want. Do you have any other places people can, find your stuff, Rich?
Yeah, sure. So in the 5ers Discord, you've got Discord calls pretty much every single day throughout the week. Mike holds these. You've got Victor that does the Discord calls. LJ does the Discord calls. I do a Thursday and a Friday, so I'm going to be holding a Discord call a little bit later on today. And it's just an environment where we just create a space where traders can come in. We have a chat. We have a big Q&A session, and we just discuss everything that's trading. Outside of that, I'm working tirelessly to build a complete resource and a course that's structured over 3 modules. Traders are going to have the opportunity to, there's a key word here, work through those modules. It's not just 3 hours of content where traders sit there and think, I'm just going to get told all the answers. Again, it's a space where it creates the environment that traders have to work through to get that clarity on their trading plan, the clarity on their edge, the clarity on their risk management, and then starting to make those connections. And this is a lifelong skill of getting to know yourself and becoming more emotionally aware of those things that we were talking about. At what point does a technical bias or a technical trade idea become an emotional bias? At what point are we trading with 100 pip stop loss when we could have done it with a 10 pip stop loss? And it's those little behavior patterns that are so subtle but we're helping to recognize or let traders recognize that they're conditioned typically in a poor way to come into the market. We hate losing, we hate being wrong, we hate losing money, we love social acceptance, we love approval. Like, all these things typically work negatively against us when it comes to going, hey, here's a pattern, I can execute on this. So we're using this course as a way of simplifying our trading right down to a very bare bones, simplistic approach where we can look at the market and go, this is my trade. If I do not execute on this trade, I'm moving backwards from the trader I would love to be. And just keeping it super simple. So yeah, that's going to come out. Then we're going to be doing group courses, group coaching sessions. There's going to be loads of perks for traders that go through those kind of through that courses. And yeah, super exciting stuff coming up.
Yeah,
so
best place
well
to find you is in the Discord for the Discord calls. Jump in there. So if you guys have a 5ers account, that's what you'll need to get access to the Discord. That would be your best place to find Rich in there, and you can interact with him personally. So yeah, it's brilliant.
Very, very well said, Rich. That's why you are our in-house performance coach, because of how you are able to explain this very clearly with a lot of clarity. I was gonna say something. I haven't answered the question yet you posted, which was, do we need to have bias or not to be profitable in the market? And I would say you don't have to, by meaning the technical bias, meaning the idea before coming to, getting to a trigger, thinking what is more likely to happen, is the price going to go up or down, more likely to happen, which one? That is, and the way I build, or what, to me, what technical bias in effectively means is, what is the higher time frame telling me that is more likely to happen on a lower time frame, right? That's my bias. Basically, I take it from the higher time frames. So you don't have.
Let me just jump in quickly and say that we're almost at 74,000 subscribers. We're 50 people away from hitting 74K subscribers. If we can do this during this live stream, let's do a giveaway. So only 50 people need to hit that subscribe. Very easy. Easy.
Hit the like while you're doing those. Anyone clicking the subscribe button, because that's the way to go. Finishing the answer, my answer would be, you don't have to have a bias. At least I don't have to have a bias. From my experience, I'm a very strong proponent of being very systematic, objective about your trade plan. Your trade plans will be able to tell you exactly what to do, exactly the right time, exactly the right way of doing it. Basically manual, but very algorithmic, right? You're following a flow chart. You check, you answer one question, is it yes or no, and that decides. You go through that flow chart, and at one end is do nothing, and the other one is take the trade, right? If you have that, a very objective rule-based system, then your bias is irrelevant. Whatever you think, because of whatever, is completely irrelevant. You just follow the system, and if you have the data, you're supposed to have the same result as the data. And if the data tells you that is profitable, then you'll be profitable, regardless of if it's against or above or with whatever other technical or market bias you may have. That's one thing. However, I will say, though, that there are ways where you may have a rule-based system that is profitable, that you can increase by tapping into what the bias is saying. Let's say, in my case, higher time frame. I know that if I go with the higher time frame, my probabilities of the trade workout are different than I go against it. So there is extra edge. You don't need it, but there's certainly extra edge if you are able to identify objectively what the bias is, what is the most likely direction that the market is going to go. That's what I wanted to say. And Mike, did you tell the 5-year-old in the audience your strategy, or is my memory lapsing?
I didn't, but we're also 5 minutes over over our segment, so we'll save that.
I just went long on
for
Euro
another
USD
day.
for your information. Went long Euro USD.
There you go, Wavy.
Really good.
Wavy has been obsessed with Euro USD today. So there you
Yeah,
go,
he
Wavy.
just got banned.
Still there.
Seems like he just got banned.
No, I just timed him out because he just kept going a little bit
Oh.
nuts about EU. So I just timed him out.
Yeah.
So,
I'm gonna show you all about that Euro USD trade in just a moment. Let's we're at almost 500 viewers right now. We're almost at 74K subscribers. Let's see, how many do we have left? We're at we only have 30. Only have 30 left. Only have 30
Punch it,
subscribers
guys.
left.
Punch the sub. Go on.
I'm gonna log off, guys. I'm gonna come back in about 55 minutes. So I need a little break, and to be able to come back with power, with energy.
Yes, it's gonna be me, and then we have who do we have? We have Matthew or Max. His name is Matthew, but it says Max when he joins, so I'm not really sure what to call him, but we'll call him Matthew. He's coming on. We're gonna be trading together, and then Victor comes on. And then I have a trading interview with Magdalena from Poland, I believe.
From yesterday.
From the other day, yeah. Nice.
Yeah. So you got a trader interview with her. Gonna be very, very cool, very exciting stuff.
Awesome.
Yeah. Well, I would like to thank you all for joining here, especially you, Rich. I mean, you're all equal, but having Rich here,
Rich
1 hour a week is. You're all equal. There's a Rich.
That's why he's called Rich. He's, just a bit richer. There you go.
Awesome. It's been a pleasure, and I will catch up with you all in the Discord in about 3 hours from now. That's when I'll be in there. It's been a pleasure, guys. I appreciate it.
Awesome.
Brilliant.
Cheers, Rich. All right, guys, we'll see you. Well, I'll see you guys later on, and we'll be back right after this. Okay, I was gonna go, but Jonathan seemed. Jonathan, I haven't done anything. I don't know what you've done to yourself, mate. But you've turned.
Is definitely you. All right, that's better.
That is me. That is all you on your
it's
end.
The graphics card. You just need to put the graphics card in.
Yeah, but the graphics card isn't going to work on the floor.
I like that question. Why are people trading this day? Well, because we're addicted. That's why. How would we not be trading today?
Because people expect us to be trading, right? If we don't trade, people complain. So we have to trade just to keep people entertained. So
exactly. That's exactly what.
Now some NASDAQ short. There you go. Done.
NASDAQ short. Well, I'm long USD JPY. No, I'm not. I'm long Euro USD. I'm long both actually. I'm actually.
that's a bit counterintuitive there. You're long and short on the dollar, but okay.
Well, it's two different pairs, Mike. It's two different pairs. They can move. But yeah, this is the long that I have on Euro USD right now. Went long on. I like that retest, like that break-in retest right there. Untested breakout. Look at that. Look at this. That's okay. So you have a breakout right here, right? And where's the this area right here? That's the immediate retest area, and then that's like the high before the breakout. Look at the test right there. That is a beautiful test right there. I might get stopped out. I might not get stopped out. If I do get stopped out, then it is what it is. But I like this. I am long, and I do not care what LJ is going to say about this trade.
I got no problem. I'm not in the euro today. It's completely fine by me. I'm short. Nice. Short NASDAQ. That's it. So there you go.
There you go. All right. Yeah. ABL out. See you guys next time.
See you guys.
All right.
Ciao.
See you guys. Take care. All right. NASDAQ. What do you guys want me to look at? What do you idea on USD JPY? Yes, I can show you my idea on USD JPY. Let me know, guys, if you want me to look at anything else. Also, make sure that you do hit that like and subscribe. You're only let's see, how many subscribers do we have left of hitting that 74K? We have I'm not going to try to do the math. It says 80, like 983, and then I had to count like what's that, up to 1,000, and I'm just going to say 20, but it's not. It's 20, like 12, 17. 17. 70 more. 17 subscriber, please. Just hit that. Now I'm begging. I'm saying please. I'm not that desperate. You do whatever you want. Okay, USD JPY right here. This is the idea. Let's go out. Let's take a look at the higher time frames right here. Let's do some cycle analysis right here. Okay, so what we have here for USD JPY is that we have been inside this range. Well, not really a range, but it is. Can't really call it a proper range because it doesn't really have that upside resistance going on. But we definitely have a solid low area that aligns with a range EQ area if this would be the range high. So just gonna put it at just gonna say that it's range. So my analysis here is cautiously bullish, cautiously bullish, because every time we hit this low, we have a V-shaped recovery with a very strong bullish engulfing on the weekly. We got it right here at number 1. We got it right here at number 2. Right now, number 3, we have a double bottom. Now, a double bottom, a double bottom is supposed to be a bullish pattern, right? But if you have V-shaped recovery twice and then a double bottom, means that the recovery on this move is not as powerful as the 2 previous ones. So I do see some weakness here. Also, if you look at the move into the level, you have a strong move into the level, right? And a bounce. Strong move straight into the level. So this is actually one down move, another down move, but this is a trend. This is a trending structure where you have sort of this type of structure and the rejection here after that V-shaped recovery, and that's what creates the double bottom. So there is definitely some weakness in this area. But if I'm looking at this on the high time frames and someone asks me, are you long? Would you long or short USD JPY here? Now, obviously, I will be looking for longs because we are at that high time frame range lows. So that's the higher time frames on USD JPY. And then if we go down into the 1 hour time frame, the daily time frame, I mean, this is what we're watching right here. So we have a couple of different levels right here. The first one is the level number 2 here, which is we have the reload zone right below. We saw this level holding very, very nicely. We could definitely see that we have a rejection up here, a move down. That's the bearish structure, right? That's the rejection that creates the double bottom down here. But now we're getting a series of higher lows and higher highs. If you ignore that and view that as a fake ad, you could also view this as an ascending triangle. I don't care, doesn't matter. Looks bullish. Is that support? It creates higher lows. I like what I'm seeing right here from that perspective. And we're also about to break above that descending trend line right here. Will be confirmed on the close of this daily candle if we close at this area or higher. The first idea would obviously be to go long up into the number 3 area where we have the 150, and then of course up to the major range highs at around 158.50, 59. And that is the current position that I have open on USD JPY right here, and that is what I'm looking at now. Because I have that high time frame bias, we can also look at, following that high time frame bias. Now I say bias, but then we had the podcast session right now, and we talked about how we're not supposed to have a bias. But you know what I'm saying. Okay. Let's just say I'm bullish. I'm bullish on the high time frame, so we can kind of follow that high time frame bullishness, hopefully on the lower time frames as well. Okay, so here's a breakout. Obviously, this is a breakout. The breakout will be confirmed on at least the 1 hour, on the close of this 1 hour candle. This is not even the 1 hour, we're looking at the 4 hours. So on the 4 hour candle closing in 1 hour and 50 minutes, we do have a 4 hour close and confirmation of a breakout. On the 1 hour, the breakout has already been confirmed. I would say that for those of you who are looking to get in on USD JPY, of course, this is not financial advice, but if you're looking to get in on USD JPY, and you're the type of trader who looks for a retrace to get in and perhaps some type of confirmation, then this breakout level, I think, becomes a really good level, especially if it's untested on even the lower time frame. So obviously we have the 4 hour, it's an untested level on the 4 hour, it's an untested level on the 1 hour, it's not really an untested level on the 50-minute. It is untested, but I don't really like that wick though. But it's untested on the 50-minute, on the 5-minute as well. And we have on the 1 minute, even all the way down to the 1 minute, that is the level that has been untested. So we can look at this level between these two horizontals as a level where we could likely get a bullish reaction, in my opinion, from USD JPY. So it's worth keeping our eyes on this level right here for potential trade. I'm still long on Euro USD. Take a look at that one. This is the idea on Euro USD. The idea with Euro USD is the break and retest right here. Okay, so what we see on Euro USD is it's coming down into the reload zone right here, came down into the reload zone, hit the midpoint of the reload zone, that's 0.702 region right here, and hit the upper part of that resistance beautifully. First retest, the break and retest right here. I think this looks really, really good. What happens if we add a trend line right here? Let's try to fit it to our bias. That looks good, right? Let's not do that. This is a good trade right here. I believe it's an interesting trade. Markets are closed in the land of the free, so we're going to be having a slow session today, but I like what I'm seeing right here. That's the trade. That's the orders that I have in the market for USD JPY. Slightly lower risk on this one because not sure really why I went in with lower risk on this one. Might want to add on that if we do see better confirmation. Make sure, guys, that you do hit that like and subscribe. We're soon at 74K subscribers, which means we initiate a giveaway. All right. Okay, how many subscribers do we have left? How many subscribers do we have left? All right, we got 11 subscribers left. 11 subscribers left. So 11 of you have to hit that subscribe, and then we are going to initiate that giveaway. We have someone asking for USD CHF. Okay, so you'll find Rich within the Discord community. He's gonna have a session in the Discord, a live session. You can go in and just go in the Discord. He's gonna have a session in a couple of hours in the Discord. You can join him on there. All right, we got only 8 subscribers left. Only 8 subscribers left till we initiate the giveaway. Let me go in and actually start preparing for the giveaway. What else do you want me to look at today? You want me to look at gold, NASDAQ, whatever? Let me know in the comments, and I will take a look for you guys. The giveaway, I'm going to give away a bootcamp account today. So today I'm going to give away a bootcamp account to celebrate the fact that we are hitting 74 subscribers. Oh, wow. There's a lot of people in here want short requests. Okay, let's, we got a few requests on USD CHF. So let's take a look at that one. We're going to start with the daily. USD CHF. Okay, so okay, so looking at USD CHF, obviously it's broken below this range. It's we know that it's trading in an area that we haven't seen USD CHF trading in like forever. And we had a break and retest of the range lows, a very bearish reaction. We have a double bottom here, double bottom on the daily. Is this an opportunity to go long? You know, we're hitting that support. We're creating a we're hitting that. So we're hitting a local resistance here. Not really sure what to think of the USD. We have a powerful rejection here. So this looks, I'd say this looks quite bearish because we had that rejection here. I would probably look for shorts if we break this area. But honestly, this seems like the kind of pair that I would stay away from. Not really liking this, because if you view this as perhaps a range, then you know you're close to range EQ, and if you're in the range, I would rather use short range highs and long range lows and not really be very interested in the range EQ area. Give me a second. I'm gonna set up the giveaway. Let's see how many subscribers do we have now. We're gonna hit that 74K. That's right. All right, we got 74K. We hit 74K right now. Congratulations to us and everyone watching, because that means we're gonna be doing a giveaway here in the live stream. So that's USD CHF right here. Wouldn't really, not really interested. But if I had to, you know, if I had to take a trade on this, I would probably look for a short, because it's a break and retest, a bearish break and retest basically. But and then of course reclaiming that area, maybe long up to what could be range highs at around 0.84. Okay. But just because we hit 74K doesn't mean you're not supposed to be subscribing. So make sure that you are subscribed. I do see in the statistics that a lot of you tuning in here, watching us live, are actually not subscribed to the channel. So make sure you do go in and subscribe to the channel. And I think we're going to have Matthew joining us here soon as well. I'm gonna wait for him to come on so I can let him do some analysis while I work on the giveaway. All right, what else do we have? Anything else you want us to look at? You probably want me to look at gold, so I'm gonna go ahead and look at gold. Yeah, not taking profits too early. You're short on gold. So I think gold looks very bullish on the lower time frames. Not the lower time frames, this is the daily. So you can see here on the daily, we're in a very clear bullish trend on the daily. We have recently hit the 0.618 on the daily, complement with that trend line right there. Looks really good for a swing long. Going into the 4 hour, that is just the perfect retest right there on gold in the 4 hour. I do not see a single reason to short gold here. That is a very good bullish reaction in my opinion for gold. Looking at the 1 hour, still not really seeing any reasons to go short here. Otherwise, other than maybe, you know, the retest of that trend line right here. And then if you add the fibs from that high to that low, we see that we're hitting the reload zone right there as well. So yeah, on the lower time frames, of course, there is an opportunity to perhaps short gold, but given the fact that it looks so bullish on the higher time frames in the 4 hour, not really sure that I would want to be shorting gold here. But if I had to short gold here, it would probably be on that breakout right there, that retest right there, stops above the high, or you know, even above these highs, and then TP. I would probably take profit here, or even down here, because you have that untested level, as you can see right here. That would be an interesting possible short on gold. USD JPY I just covered a couple of minutes ago. Just go back and take a look at that. We got GBP USD. Let's take a look at GBP USD. Right. So on the daily for GBP USD, we are bullish. Very, very good looking uptrend right here. Even though we have hit a high time frame resistance right here, we do have higher highs and higher lows on the daily. The fact that we did break below that low might be a sign of weakness on the daily, might be a potential sign of a break of structure here on the daily. But I do like this reaction, and if we can see structure that might look something like this, then I think I would prefer being long on GBP/USD. But right now, I see a quite messy chart. It's not very, very clear. I don't really have a great sense of direction, other than the fact that I think the path of least resistance is to the upside. I would favor longs in this area on GBP/USD. Let's take a look at Bitcoin. We got some requests on Bitcoin as well, so let's take a look at Bitcoin. Right. So here we have. First, let's take a look at the daily. So what we have here, actually, do we have anything on the weekly? No. Okay, so what we have here on the daily for Bitcoin is okay, so it looks like we're forming a range here. Okay, so one good thing is the fact that we're holding the reload zone here. We're holding the local reload zone right here. Now that is obviously a good thing. I like the fact that we're holding that support. If we break below, let's say 100K, because 100K is right around that number 4 level right here, right below that last swing, the last higher swing low. If we break below that level, I think we're going to go down to perhaps the 96 region marked with a number 1 right here. If we go into the 4-hour, we have a couple of scenarios that I'm watching. These levels are a little bit older, but I think they're still valid. So what I'm looking at here is Bitcoin is testing the local reload zone, that trend line right there. We have 2 important levels. The first one is that 106 level marked with a number 2. And then below the level that I mentioned previously is that 96 region. If we fail to hold the reload zone here and dip below 100K, I think we're going to go down to 96 region. And that could potentially be a really good long-term buying opportunity for people looking to go long on Bitcoin. A reclaim of the 106 level would also signal strength for possible intraday longs. We got oil as well. Let's take a look at oil. I do have analysis on oil as well. So we're going to look at the daily here for oil. We have a low time frame breakout on oil right here. So what happened here for oil? Obviously, we have with the tensions in the Middle East increasing, we did see a break above that 66 level right here at number 1, and then not only did it go through that 66 level, it went straight through the 72 region as well. Now hitting a major long-term high time frame descending trend line that has kept price down since October 2023. So obviously an important level, an important trend line, but I do view horizontal levels as more important. And looking at the horizontal levels, we do have an important area here at 80. Now, if we do see a low time frame breakout here and perhaps a break above the descending trend line, I do view 80 as a potential probable resistance area where bears are probably going to come in and try to defend that area. Now, what we do see here on the 1 hour is we do see that it's starting to break out. We do have a very bullish structure here, but we have to remember that we have that high. That's the high of the latest impulse move to the upside. So I would view anything from this area down to perhaps this area as the resistance zone. I would view that as the whole, resistance zone, and we need to break above that area to initiate that potential move towards 80. So I do think we have an interesting potential trade here on oil. All right, what else do we want to look at? We get a lot of people looking for analysis on gold. And I'm not going to take a look at gold right now. What is happening here? That's weird. Really got to change my graphic card. Lots of things happening here. Okay, Henry says AUD NCD. Let's take a look at AUD NCD. Says 30 minutes. Okay, let's look at the 30 minutes. Yeah, I think. Yeah, that definitely definitely head and shoulders here. I do, however, think that this would be the neckline, and I think that's the area that we need to break to initiate a potential short on this. I would also want to make sure that we're in the direction of the overall trend. Look at the daily. Yeah, this actually looks really good, because overall I would say that this market is bearish, and we could potentially come down and hit this level right here. So yeah, I think this I think this looks good, man. You know what we should do? We should have a session where it's like we do like a workout session, like just me doing like this. Been standing up, doing all of these live streams all day. Man, it is killing me. I mean, I love doing it. I love you guys. But doing like hours and hours and hours of analysis. Who am I kidding? I love this. It's just my I need to work out more. Like I need to start lifting some weights. Okay. Let's do pull up light. Okay, you know what? I'm gonna remove that. I think I'm gonna remove that comment. I'm gonna answer that. No way. Way too little. Way too little. Technical chart is anonymous. Yeah, that's it. That's it. We should definitely create a group on this. Yeah, maybe there is. Okay, let's Google this. Let's Google this. There's definitely create a support group with that name. Technical. Okay, I mean, what's your win rate? What's your win rate? My win rate. Oh, man, you put me on the spot right there. Do I really have to? Do I really have to tell you all what my win rate is? Okay, I'm gonna go in. I'm gonna tell you what my win rate is on my current high stakes account. Huge is what it is. It's a huge win rate. Okay. Yeah. Okay. Guess. Okay. Let me. We don't really care. No, I don't like. I don't care if you don't care. I care. I care about me caring, and I'm gonna show you. Like you watch. You watch me sharing this. Okay. Danny says 33%. Florian says 78%. 86%. Guys, come on. 50 or 50. I like that. 90%. 50. Henry says 88%. So 91%. What do you who do you think I am? All right. 30%, 63%. Okay. 52%. 52%. Okay. Okay, well, okay, 66.66666666 there. 55%. Okay, now you're just throwing out a lot of numbers here. Let's see who's right. The current, now I'm gonna go through a couple of different accounts here. Okay, guys, I'm gonna go through a couple of different accounts. Okay, so the you know that high stakes account that I bought that I said I'm gonna be super disciplined on this one. I'm gonna go, I'm gonna make a lot of money on this one. That one currently has a 16% win rate. Yeah, you heard right. 16 beautiful percent. So yeah, I should probably just flip that and trade the opposite. So I got on that, but that's just six trades, right? So that on that high stakes account, 6 trades, I got 16% win rate. Now let's see, what do I have on the on the boot camp account? Let's take a look. On the boot camp account, I got 44% win rate. And on the account where I have the longest trading history, where is that one? On that one, I got a 60% win rate, and that is over how many trades? That's 500 trades. So over 500 trades, 60% win rate. So yeah, I could safely assume that my win rate is around 50. I mean 60%. And then when I'm trading like a goddamn degenerate scalper on this hypergrowth account, apparently I got 16% win rate. So yeah, if I let my mind do the things that it wants to do, I have a 16% win rate. And then if I try to trade more logical and actually follow the system, I have around 60% win rate, which, yeah. This is a good question. Can we please just get back to talking about trading the charts and possible entries? Listen, dude, I'm not gonna give you I'm not gonna give you signals. If you're here for signals or you want to follow me trading, there's a lot of different fake signal services out there. That's not what we're doing here. I mean, I'm happy to help you with the chart requests and things like that, but I'm not gonna, I'm not gonna help you get a. It's not meant to be a copy trading live stream, This is a good question. How do you select pairs that have potential moves? Okay, so what I do is I have my list here. All right. So we got, let's see right here. What I can do is okay, so I got this green list. Now what I do is I'm gonna remove everything. No, I'm gonna keep it. So what I do is this is my structure for finding good trades. So this is how many pairs do we have in this list? A lot of them, like 40, 45 or something like that, right? And what I do is to go down in the list, you basically press the space bar, and that makes you go lower in the list. Magic, right? And then if you press this little flag to the left of, in this case, USD CHF, it adds a green flag. And there's a shortcut to that. You can also press Alt plus Enter. And you see, it flips from gray to green. What I do is I have one finger on the spacebar, one finger on the Alt key and the Enter. And as soon as I see something on the daily that I like, something that just, I can't really describe what it is. It's more intuitive, right? If I see, for example, that we have a high time frame uptrend and a break and retest, it's in an uptrend and it's currently testing a support level, then I will be adding that to the green list because I want to long that support. If you have a downtrend and prices at resistance, I want to short that. If the structure is clean and clear and I see something in the first few seconds. I'm talking about like 5-10 seconds. If I can't see anything in the first 5 seconds or so, then I'm going on to the next chart, because I'm not interested in trying to force my analysis. I've been doing this for almost 8 years now. I've been looking at the charts for hours and hours and hours every day for the last 8 years. I know what I'm looking for. I don't have to spend more than a couple of seconds to know what I want to see. So USD CHF here, this is interesting, because it's like a break and retest. Now, if I do any deeper analysis on the next stage, I know that I'm not going to like this because we already did it. So I'm going to move forward with the next of the, I like this. And then I'm just going through this quickly and looking at pairs that have something interesting going on the higher time frames. Not interested in the ranging market, not interested in anything like that. I'm interested in markets that are at support or resistance. And I'm just going through like this. As soon as I see something, I'm going to be adding it to the green list. I'm not really sure why I want it on the green list a lot of times. I'm just going to add it if I see something that I feel looks good. And then after this stage, I'm going into the green list, and I'm doing another analysis on the lower time frames to see if I'm going to remove anything, or if I'm going to remove everything, or if I'm going to move it to remove it from the green list. So here we go to the 4 hour. Now we're on the 4 hour, and look at that CAD JPY, absolutely beautiful break and retest on the 4 hour. This looks really, really good right here. We're going to keep CAD JPY in the chart. We go to gold. We're going to keep gold in the chart. Are we going to keep EUR NZD on the chart? Let's remove that one. Let's go to the next one, Euro GBP. We're going to keep that one based on the 4 hour. Well, I like it on the daily. I'm going to keep monitoring this one. Euro USD, yes, obviously we're long on that one already. GBP USD, I like this for potential short if we break above that level. So what I'm going to do in this case is I'm going to be adding an alert above that level and those wicks right here. We're looking at AD USD. AD USD looks good for a short, maybe even a long. Look at that. It's a break and retest also on a support that has reclaimed that support. But I'm more interested in shorting this, kind of filling that space to the downside. So I'm adding in an alert right there, and also an alert maybe above that high to kind of alert me if something's happening, so I can recheck that chart. And then we got NZD USD. What do I like about NZD USD here on the 4 hour? Did I like anything? No, I'm not liking NZD USD. USD JPY, I like. CHF JPY. Do I like this one on the 4 hour? I like it, but not a lot. So I'm going to put an alert here, one alert down here. I'm going to remove it from the list, and then we'll go to Euro JPY. Do I like Euro JPY on the 4 hour? Yes, but only if it gets above that level or perhaps below that one. So I'm going to remove it from the list. And that's it. That's the scan. Okay. So I can do that. It takes, how long did it take me? Maybe 1-2 minutes. 1 or 2 minutes a day, can go through 40 different pairs. Just get a feeling for where the market is heading. And try to follow the potential moves. If I find a pair that it's not like perfect, but I can see that if it moves above a certain level, I want to long that, then I will add alerts at that level. So now we have a list here with interesting pairs. Okay, so looking at CAD JPY. Now CAD JPY looks absolutely fantastic. It has like a downwards trending move here, and it kind of flips bullish here, and we now have higher highs and higher lows, and we have a beautiful break and retest here on the 4 hour as well. If we add the fibs here, we will see that it is hit the 0.618, and we do have the 50 in a good area here as well. So I would like to perhaps get in long on this one right here. No, I don't really look at any fundamentals. I only look at technicals. I do look at fundamentals because I want to learn more about it, and I'm trying to learn more about fundamentals so that eventually I can start adding a potential fundamental bias into my technical trading. But at this point, I don't feel like I don't really have the knowledge necessary to do that. But I'm slowly but surely learning and understanding the fundamentals of the market. But even with the fundamentals, I mean, a trend is a trend, an uptrend is an uptrend. If I can get in on an uptrend and hold that for as long as that uptrend is alive, then I don't really need the technicals, do I? So I would love to get in on the CAD JPY a little bit lower. See that you have a good breakout here. Go back to the 4-hour. Like trying to get an entry in here, and then getting out at those highs. I think that could be a possible trade on CAD JPY. I really do like the way it's looking. Okay, I'm gonna lower my desk here. Okay, so thank you, by the way, Henry, for telling me I'm muted. So yeah, I don't really have any idea why gold have been trading sideways on the 1 hour. Like I said, I don't really care about fundamentals, and obviously that would be a fundamental reason for that. And I do believe right now that the American markets are closed, and given the current situation in the Middle East and everything, there's no clear idea of what's going to happen. It might just be the case that there's no clear direction in both technicals and fundamentals. We usually need a catalyst, right? We usually need a catalyst to have a big move, and we're not really getting that now. But then if you look at gold on the high time frames, it's super bullish. It's very, very bullish. What's your take on NAS? Yeah, let's take a look at that. Okay, so what I'm seeing here on NASDAQ is two ranges. So what I would do is first we ignore that move to the downside, and we ignore that move to the upside, because it looks like those are deviations from the range, and those are fakeouts. By doing that, we can mark out this level, first range. And then we enter a second range where the range high of this one becomes the range low of this range. For NASDAQ, I would be viewing the previous range high and what would also now then be the range low as support. And if we continue lower, obviously this would be the support level that I'm watching at 21.5. Let's go into the lower time frames. At the 1 hour, we can see that we're hitting a support level around that area. On the 15-minute, we got that support here as well. The 5-minute, at that support level. It's been holding this level all throughout the day since the Asian session. I'm not going to expect a lot of movement, obviously, from NASDAQ today with the US markets being closed. But it's definitely an area that we should be watching. This is actually a really good support area. So nice. I love when I'm adding levels, and then you get comments like this where you guys have the same levels as well. I think at that point you know that you have an obvious level, and I think it's the obvious levels that work best. Levels that are found by different traders and different trading styles using different systems. Because I'm working on setting up the giveaway. Yeah, of course, you're 100% correct on that. I mean, I would assume that if the tensions in the Middle East is going to deteriorate, or the tension is going to be increasing, then we'll have most likely a risk off move. But don't you guys think that it's holding up quite nicely? I mean, the situation is not really great, it's not. But don't you think, guys, that it's holding up fairly well? I mean, we're trading in the same area as we were at the beginning of the month, right? So it's not like we have broken down significantly, right? It's just I find it very interesting. Okay, so gold is starting to move lower. I still think this is a really good buying opportunity for gold down here. But as I explained on this chart for gold, we did break down this level right here. So whoever shorted gold based on that low time frame, good idea, good trade right there. Okay. Let me take a look at how EUR/USD is doing. This is the long that I have on EUR/USD. I'm also long on USD JPY. That one is obviously looking quite good. Let's see. I'm just gonna. Yeah, congratulations. I know who had that. That was Norax. Like how should we pronounce it? Norax FX. Nora. Is it Nora or Nura? Nura or Nora? I don't know. I'm just gonna look at my phone. I'm gonna see what USDJPY is doing on the personal account. I don't have USDJPY open on the 5ers account at this time because it's gonna hit. But it's pretty cool. I'm in almost 200 pip profit here. So it's because the way I'm trading these setups here on the higher time frames, I have to daily fluctuations. It can easily hit that the daily stop out level, and I'll lose the account. So setups like these, what I mean is this one. Setups like these is taken on my personal account with 2% risk. So imagine if I have a move that goes up here, then I'm up 2%. But if it goes down to stop loss, that would mean that I have a 4% daily loss. If it goes up here and then down here, I have a 5% daily loss. and that would actually stop me out on the funded account. But on my personal account, I can hold this for weeks and weeks and just see it go up and close it based on the daily structure. I'm actually going to increase my position here on USD JPY. Just give me a second. I'm trading this on Oanda, but I'm actually going to change broker from Oanda to IC markets. IC markets have good, really good conditions, much better than Oanda, in my opinion. Oanda, if you're watching this, you might want to offer me like a super good deal, maybe like awesome spreads and slippage. Then I'll stay. I'll stay with you guys. But you're probably not watching this. Okay, so let's see. How big of a position size should I enter? Okay, let's do 5,000. Right, so I've doubled the position on USD JPY. Well, let me take a look at USD JPY. Let's take a look. Let's see what we got. USD JPY. Yeah, I'm in a drawdown. That does not change anything. The setup is still valid. But thank you for your opinion. I do value your opinion quite a lot. You seem like a very nice person that I would enjoy having a conversation with. Right. So I do still think that it's a good position to be in right here on the 4-hour, not on the lower time frame score, because on the lower time frames we do see a rejection right here, and of course it goes against my idea on USD JPY right here. But let's see what we get on USD JPY. Yes, we can take a look at GBP USD, definitely. You know, I do like GBP USD here from a furlong. It's just that this swing low area becomes rather problematic, right? Because if you look at the trend like this, then obviously the fact that you broke the structure here makes me think that it's likely. This is why, it's likely. Let's just get rid of that guy. You know what I think? Most likely what I think is that you probably took the same trade and now you're just absolutely furious because you're in a drawdown. I mean, obviously a very emotional person. What you should do is probably reduce the risk that you're taking on these trades, okay? Highly recommended. So, breaking below these lows right here is definitely some sign of weakness, right? But looking at the daily, I still like the support zone. It's still like this whole area is still a support zone. Okay, let's get rid of him. I do tolerate quite a lot, and I'm not really getting affected by things like that. But when it like once or twice, no problem. But when it's like we make a sport out of being negative, then obviously we have to get rid of people like that. I do. All right, we got the conscious day trader. Here we go. Good evening, man. How's it going? Well, okay, so. Every time you pop up here, I'm like, we need to get him on. But then it's like, forget about it. So I will go in and I will I have a little to-do list, and I will go in and I will add a task, and I will write contact the person with the beautiful profile picture. Right. How's it going, Victor? How are you?
I'm doing fine. I'm in a trade. I'm short the EU.
Are you shorting EU? Okay. That's great. That's good for you, man. Absolutely
I
amazing.
haven't been listening, so you're not shorting EU.
No, I'm long EU.
Okay. No, but I'm almost hitting TP in a little bit, so maybe you're right. Maybe it's gonna continue to go up after hitting my TP, or maybe I'm gonna be wrong. Not wrong, but I mean maybe I'm gonna be stopped out.
Everyone's short the EU. Like it's yeah. Well, you know what do you say? Like when everyone's in one, you know, it's a crowded trade. That's what you said, crowded trade. But you know, knowing the size that probably you guys have, like when you close that short, it is going to be one massive squeeze. It's just going to go straight to the upside, because obviously someone else has to take that other side of that trade. So what? No, I'm still liking this for EU. I think. No, I like this. I like this as a long. I think this is an absolutely. I mean, I've been waiting for this level to be hit since, you know, feels like forever, but it's been probably a week or so.
We have one request here that I have no choice to honor right away. I'm gonna be doing that right away. Let's
Really?
take this off.
I thought you were gonna do it. Holy shit! I'm like, what is happening?
How is everyone doing
Right.
in the chat? We like your presence and all your messages, as long as you're positive. We are in a non-toxic environment, so everyone who I know, you guys who are listening to us and are active in our regulars, you know how the vibe goes. But from time to time, we see some people that, you know, apparently they have an excess of negativity, and they want to be generous with it, but that's not allowed in here.
Yeah.
The same goes for our Discord community. We have a very strict policy. You know, non-toxic, toxic. It's a very safe place to say I'm wrong. I don't know. That's all fine, right? Because we're raw reality. That's what we want. So that's what we aim for everywhere, right? The The5ers is about positive. It's about helping you, empowering you, becoming better in any way we can, and that's the essence. That's the beating heart of our intentions in these streams. All right, so we have LU Forex. Thank you for those words. Yes, I really appreciate that. I should say plural. We all appreciate. The whole team appreciates when we see those. I was gonna say those reversal, because I'm watching a reversal right now, but no, we appreciate those nice comments when you guys acknowledge. And while you're at it, if you haven't done so yet, not only the person who posted that comment, but everyone else, if you think this is good, this is helping you in any way, even if it's just making you laugh by us saying silly things, hit the like button, subscribe to the channel, and we will do giveaways. We'll promise that we will give you back at least as much as you give to us.
Yeah, definitely. We have 74K subscribers right now. I hit that today, so we're gonna be doing a little giveaway based on that. So thank you everyone who did subscribe. Really do appreciate that. Man, I'm tired. In about I'm gonna go. I'm gonna jump off in about 20 minutes to do to do a trading, do an interview with a trader?
I'm dying to show my I wasn't gonna expect that you Jonatan, you're gonna say let me see that trade. You're short. You're in a trade. I want to see it.
Yeah. Let me
And
see it. Let me see it.
I've been waiting here for that invitation. I didn't want to impose my trade on to the stream. So I was waiting for someone, you Jonatan, or someone in the chat to say I want to see. I see this trade. Well, let me show you.
Of course, go ahead.
Since completely, from your initiative, it's not mine. It's completely your initiative, all of you. This is my my trade. It's a very small trade in comparison to. It's only 17 pips that I'm going for, but that's the trade, and I might be wrong. That's perfectly normal, but that's the trade. And why did I take that? You ask yourself. Well, I just put on the mask, and that's it. That's the whole strategy. I put on the mask and I close my eyes, and it tells me to do things. If you want to know, if you want to get one of these masks,
strategy.
Yes, contact me privately. My contacts are in the comments of the stream. I'll have my private, and you can contact me there. I'll send them, for a very low price to everyone who is interested. The mask, I mean. All right, no, let me go back to the. Let's get serious.
Be careful, like there's probably people out there who would love to have your mask. There's a lot of weird people out there.
The thing is, I don't have any private contacts info in the comment of the stream, so
that's about I'll
right.
add it, don't worry.
All right, so the idea is we have let's begin with, do we have on the daily time frame, does the daily tell us something? Yes, we have a daily order block, but the price did not reach it today. We're very far from that. Didn't reach it yesterday, so the daily didn't tell us anything other than, we have just created a daily order block. It means on the daily time frame, the sellers are, at least for the time being, in control. We might be in a bullish market structure on the daily, but currently in the last couple of candles, the sellers took control, right? That's how these order blocks are created. Otherwise, they wouldn't be there. Okay, so we have the daily, but it's not telling us anything, right? The daily is up there. It didn't cause me to think anything. We go to the H4, and I see a fresh order block, a fresh, and by fresh, I mean a recently created. Very simple, recently created. Whenever I have an order block, it tells me, it's a sign that one side took control. That's it, right? And as the more recent it has been created, the more powerful it is, in my opinion, and not only in my opinion, in my data as well. And that is why, to me, it's a sign, it's a signal, it's a green light. In this time frame, it means that I should be looking for a short from this level. All right, so I have the structure, which is the order block, and then obviously I go to the lower time frames, and I try to find multiple time frames telling me that there is an actual, because the H4 is too wide, I want it to be as tight as possible, right? So I can have these high risk reward ratio trades. So what I then do is go to the H2, I'm sorry, and I find that there is an area where the sellers, look how they created that big candle to the downside, right? Where it dropped, sold off from that level. And the idea is, if the sellers sold off from that, they came to the market and sold off the market from that point, they're likely to do that again when we come back, right? The retest idea, the concept. So whenever that happens, and that happened in this candle not very long ago, I look at the lower time frames, right? And try to find, after we engage this area, so actually in this candle right there, I know I'm Picasso on the chart. Thank you for your compliments. This is the candle that interacted with that area. and I'm going to look for a reversal pattern. Now, in this case, there wasn't any on the 5 minute, but if you look on the 1 minute, there is one, right? And when I see this kind of reaction to those order block, to me, it's game time. That's the moment it is my time to get into the market, right? At least that's how I think about it. Whenever it doesn't happen, not my time. I'm not at turn to do anything. But when I have these kind of reactions where I see that the structure, the pattern, the area, the hourlies, everything lines up, that's the moment for me to get in. Now, whether I'm going to hit TP or not is beyond my control. I have no control of that. Nobody does, right? So I'm just going to accept it as it comes. If it goes to my TP, great. And if it goes to my stop loss, great as well. I don't want to sound mean or arrogant or anything. I shouldn't care. We shouldn't care if it goes either way. What we should care is that we did our job. We identified the setup and we executed flawlessly. That's it. And whenever I do this, we could actually, I don't have to do anything else than just look for the next setup. While even this is open, I can be looking for another setup, either in this pair or in another pair. That's it. That's the trade.
Victor, I'm going to be back in just a moment. I feel like I'm falling asleep here, so I'm just going to walk around a little bit, get some fresh air. I'll be back in just a bit.
I don't have the soothness of the voice as Rich does, but if you're getting sleepy with my voice, then it's a sure sign. It's a sure sign that you need to take a break.
You know what? I love listening to your analysis. But I love listening to it when I can really pay attention and be part of the discussion and ask you questions about the things that we're talking about. At that point, I feel like it, But now I'm just zooming out, and when I zoom out, it's a good sign that I need to.
Now I understand why you. Now I understand why you had that big French press exposed not long ago.
Exactly. All right, I'll be back in just a bit.
Where before you go, where were the beans from?
But the beans are from. I usually try to get everything from Africa, so I try to get them from. I can't remember what's that place name. The name of the place where kind of coffee originated from. Not Kenya. Is it Kenya? No, it's not Kenya. It's people in the comment. People in the comment. Where did coffee originate from? Like the first coffee beans. Where did it come from? Where they have the wild Ethiopia. That's right, Ethiopia. I try to get everything from Ethiopia, and like the best coffee is like wild coffee, lightly roasted, absolutely amazing. It's difficult to get hold of though, but it's really, really amazing coffee. Ethiopian lightly roasted.
I'm sorry to hold you on, Jonatan. I think you need a little break so you can revitalize, you recharge your battery.
Yeah, I'll be back in a bit.
Don't worry, I'll keep the fortress. All right, so let's see. We can yes, that's the right one. Thank you for switching it before I noticed this was already in place. So chat, let me know what you guys think of this trade. How would you feel? I have already my ideas, right? My trade plan, and I have chosen, right? I don't micromanage. I don't actively manage my trades. There are exceptions to what I'm saying right now. There are moments where I will come in and actually, intervene. But in general, I try to do that as little as possible. Why? Because I'm not concerned about this particular setup. I'm looking forward, in 20, 50 trades or even 100 trades, do I get a lot more profits for the extra time that it takes, extra energy, extra attention, and my answer is, or at least the data that when I consult my data, it tells me that yes, on particular moments, you might get better results by intervening, by doing extra analysis as the trade is open. But in general, set and forget is the most efficient way for me, and is roughly as good as it gets. There are particular moments where I can spot, let's say, something in the market and say, well, I'm gonna take my profit. I'm gonna close the position right here, and it's good, right? We have a breakdown, for example, right? We have a breakdown here of this level. Let me see if I were to, let's say, use price action to actively manage my trade. I would say, well, we had a level here, right? It broke it, and now it should continue to the downside, right? It should accelerate and continue to my stop loss. Instead of that, it goes the other way, right? There is a huge candle coming in, outside bar, bullish, even if it's only on the 1 minute, but you can go look at it. You can even see it on the 5 minute, and there's actually a 5 minute order block here. So I can understand why the market is doing what it's doing. I could say, well, this is the place I should get out. The market has switched, and maybe it has. However, if I've measured me actively managing the trade, or just set and forget, and obviously the target is very important, where I set the target. But if everything, if the target is well chosen, but the rule by which I set my target is based on my data, that's the optimal way to put it, the optimal place, then it's none of my business. And what I've noticed is that active management may seem like you're doing a better job, but in reality, on the longer term, it's not that much of a better job, right? So I say this is the most efficient way. I can get in and just set my stop and target, and I can walk away or look for another trade, right? And I'll just leave it. I'll not move it to stop loss. This can come back and take me out. Jonatan would be right? The market continues to go up. The trend is to, on this time frame, it does look like it's bullish. At least there is a lower time frame, a 5 minute trend. But I think this is perfectly, not perfectly. This is my trade. So, and I know from the data, from experience, that I'm going to be putting a lot more time in actively managing this and not getting better results, or it's not going to be that much better, right? So in terms of efficiency, set and forget is the best way to do this. All right, let's go to check the chat if you guys are thinking about this. A lot of you are talking about gold, so I suppose let's see gold. Let's say gold. Sure, we can look at gold for Florin. Cataline says, I would close. Yes, and I completely understand that, right? You have and it makes sense. It makes a lot of sense. In terms of the market active management, I would understand getting very, very close to stop loss, to target, and then switches market the order flow, basically, right? You have it's reacting to bullish structures, creating new one, retesting those new ones, and pushing up. It looks to me, and by all sense and purposes, that it may have turned, and now it's going to go to my stop loss, right? And if that happens, I may not look like that was such a great entry, and my management would be. It would look like my passive trade management, right? The set and forget is not so good, but it's not about this particular singular trade. It's about the large numbers. And in the large number, I noticed that set and forget is more efficient, especially less time, and there is less way where you can mess things up. Right? Because you just make sure that your setup identification is right, your trigger is valid, and you enter. set your stop loss and take profit, and you walk away basically. And it's a good example of let's see, maybe you'll stop out, and that's just fine. That's just one more number trade in this long sequence, and I'll look back at a bigger number and see what it means to us. Don't forget, while we are waiting for this trade or anything else to happen, or maybe we might even go to gold, don't forget to hit the like button, click it with the mouse. Just go hover. If you're not sure how to do that, hover over with your cursor and click. As long as you hear that clicking sound of your mouse, you know you're doing it right.
All right, so now we're back at break even for that Euro USD trade. I think it looks pretty good. I'm gonna have to jump off. I'm gonna have to jump off. I'm gonna do that trader interview shortly, so I'm gonna prepare for that one. I will right after that interview. I will jump back on and do the giveaway before we close down the stream for the week. So I will see you all in 30 minutes or so.
All right, Jonatan, we'll be here whenever you are ready and able to come back.
All right, take care. See you soon.
Bye-bye. Okay, so Amal says, did you book partial on this trade, Victor? Or you're going to hold the whole quantity till TP? I'm going to hold everything, right? As I said, sometimes the trade plan, I know, you don't have to do things that are not, that doesn't make sense. It has to have some kind of logic to it. However, if the data tells me, that set and forget, it has a better result than me actively managing it, and it's more efficient, my job is only to follow the plan. So I'm not gonna do any active management, and if it goes to stop loss, so it be. So I'm not gonna close anything. I do have moments and reasons to close this trade, but it's not now. Right? Those are different rules. They don't apply currently to the current time. Baida says he would close that on the 45. So basically on this candle, he said he would close. Let's see. On this candle, there, you said it here. All right? So you would close at this candle, which is certainly very it makes a lot of sense. I wouldn't agree against it. Okay, if you what I'm a proponent of is do both of them. Do for 50, 100, or even if you can, even more, record what happens if you set and forget, right? Apply passive trade management, and then do the active trade management. But obviously the active one needs to have some clear rules that are very certain when you're supposed to act and when you're not supposed to act. Okay, and what you're supposed to do. It cannot be something vague. It needs to be something very objective. Measure those two, record it, and once you have enough information, 50, 100, or even more if possible, compare both of them. Compare how much time one took to manage. The passive one takes 0 time, extra time, and the active management, and see if it makes sense for you to babysit the trade and be actively watching it for the whole duration of the trade being open. And be the judge yourself. Maybe the way you trade, maybe it makes sense. Maybe you will find that active management gets you a better result. And maybe you find some kind of a rule that doesn't cost you that much time. Who knows? If that's the case, then by all means do it. But that's the idea of finding out. Let the data guide you to what you would be. Why is he wearing a mask? That's the question. I know. It may be different. It may be it may elicit that question whenever people see me for the first time. But believe me, it's very necessary in my case. All right. So Sammy has a question here. Victor, do you have a monthly, daily, weekly target for return on investment on your capital, or just come to the market every day and take the trade if you see your setup? It's the latter one. I don't have a target. I think not that targets are necessarily bad, but they can be an issue, right? So if you don't control targets, they can make you do things, deviate from the plan, while you shouldn't have. I'm a very strong believer that if you're supposed to use targets, like in this case, or anything in your trading plan, if you're supposed to do anything in your trading plan, then you let me put it the other way around. If you see in your data that you're supposed to have targets, and the data supports that, like convincingly, not like a suggestion or a possible idea, no, something you have tested well, then it should be part of it. And I have seen is having a target doesn't help me, because sometimes the market is very giving. Sometimes I get good periods, and if I have targets, I'm going to stop myself of extracting the profit that such period will give me. And at other times, when the market may not be as giving, right, my strategy doesn't perform that well, what will happen if I don't reach my targets? What will happen? I would try to look for new strategy, new entries. I will perhaps be a little bit lenient with my rules. But I think that's the wrong way of trading, right? You should only trade your trade plan and nothing else. If you think you can do better with your trade plan, then change it. Prove that whatever rule is better and incorporate it in your trade plan. But you only should trade, in my mind, always only trade your trade plan. So and targets, it doesn't help me with that. Although I must say that obviously I know from my performance monitoring what are the ranges of my how many multiples I get per week on average. What is the maximum? What is the minimum? What is a negative week look like? What is a negative day? You got to have an idea of what these are to you, to monitor, to as a quality assurance that if you start exceeding these ranges, then there might be something that's happening that you should take care of, right? That's the only reason I think targets are good, to manage your expectation and to know, identify the periods where something is not right. At least it needs more attention. It's like the dashboard of a car. When you see, if you have gauges for the oil temperature or whatever metrics of the car, the motor, the engine, it's to let you know that everything is running fine or it's not, right? So you can intervene and see what's happening before the engine blows up. But that's the only reason, or that's the only use that I have for monthly or period-based targets on my equity. All right, so let's let's see what else before we continue. Yes. No. Why turn a winner to a loser? Yes, I understand the logic, and it makes a lot of sense in my head as well. But the numbers, it's very simple. It's not about, sometimes, the edge may not always be logical, or what you expect. It may not be common sense. If you measure, as I said, if you measure one and you compare that to the other one, passive versus active management, in my case, for my particular setup and my particular trade plan, I've measured that it makes more sense to have active management, and that will mean that some trades will go perhaps very close to TP, but eventually stop out, and you will have that logic that, you know, a winner will turn into a loser. But in the long term, what I've measured is that it makes more sense. It's more time efficient if I just put in a passive trade management, set and forget, and you know, and that's what I'm going to follow, right? Which one is better for me? And it may not be the case for you. I certainly am sure of that it's not for everyone. But in my case, it is a case. It is a case where I'm better off by using passive management on my trade plan. All right. So GJ, someone asking for GJ. Maybe we can take a look at it. Exactly, Sam. That's exactly one of the benefits of passive management, because you know what is the thing with passive with active trade management, that it depends more so on you. It relies on you reading the market, watching perhaps every candle. And not that I don't trust myself, but if you ask me, you know, we are a big source of errors, right? Errors in judgment. Not only that, you also have the issue of mental capital, right? If I have to watch a trade, and I'm actually risking, if I don't do my job in babysitting it and reacting when, you know, whatever my active trade management tells me, for the whole duration of the trade, that means that I cannot do anything else, or I'm very limited in what I can continue to do. So that's a big, huge advantage of a set and forget. You can just enter, make sure that you did everything correctly when you entered, and you can basically walk away, come back to the end of the day and see what happened. Well, you don't really have to, but I mean, you get the point. You could. Instead of being constantly watching this, and emotionally it's going to drain on your emotions, because you're going to see all the ups and downs of the market, and the market makes many turns. A lot of times it just goes sideways. It goes a little bit up, a little bit down, and eventually it does whatever it's going to do. And in the meantime, you have this emotional roller coaster. By the time it actually hits one of the two stop loss or TP, your mental capital is depleted. So that's one of the huge advantages of passive investment. I would recommend everyone doing it, and it also makes backtesting very, very, very simple, right? You have just one rule for your stop loss and one rule for your TP, and you can backtest that very, very quickly. All right. Why did I not close? Well, I just explained it. Rib black, or Rib Lackey, or Rye Blacky, whichever it is. Thank you for your comment. I usually see past moves that have the same size of my target, and let's say it took 5 hours past to reach my present trade, won't last more than that. I'm not sure I understood what you mean. I do understand that there is also you could optimize. You could be different ways. You could use EMAs to trail your stop loss. You could use use your statistics to what is the average duration, and whenever it starts lagging, you will close it. You can do many things to optimize it, and that's all fine. But as I said, when I compared them to passive trade management, nothing beats it in terms of efficiency. And so that's what I get very good results with that. So I say, why bother increasing my effort, my energy that I put in, if I can get 80% or even more the profit with perhaps 20% the time, right? That's the whole idea. Be efficient with your time, because in the same time that it takes me to perfectly babysit and actively manage this, I could have done 2 or 3 trades, right? So in the end, it's much more efficient doing this way. All right. But you'll have to test it for yourself. So it's not for everyone. And I don't mean to say that, passive trade management is the only way to go, because obviously we already know that there is no one way to be profitable or to maintain profitability. There are so many ways to be profitable, and it's up to you what fits best to your available time and your inclinations, your personality, and all of that, how you are in terms of patience, impatient or not, and things like that. Okay, perfect. So let's I like this comment, or this this comment. Can I trade with mom's credit card? All right. Dan asking me, how many trades do I take in on a given day? Then my average is around 90 trades per month, but they're not. The average is around it ranges, right? It's not like one number and it's always the same. It's an average, and there are days where I have 1 or 2 trades, and other days I can have up to 10 trades in a day, right? So, and it ranges depending on market conditions and opportunity the market gives, etc. But that's in the general idea, around 90, sometimes 60 as well. Sometimes it goes above 90, but the average is around 90. One great question here. I like that. I like this one. How would you scale your funded after successfully trade a 10K account? Well, if you want to, in my opinion, the best way to scale, meaning taking bigger lot size, right? When you have bigger amounts, it is by using a formula that takes into account the available trading capital you have, right? And I have actually I did a couple of videos on this. I can it's on YouTube, risk management. If you go through our videos, our videos on risk management, you will find it in there. And if you just keep on applying the same rule, right, available risk capital, when you scale up from 10 to 15 or whatever it is, the step you're doing, or you're going to a bigger account to 25 or 50 or 60, just keep using the same formula. You may adjust the risk settings, meaning you take more risk when you are on an evaluation, and you take less risk when you're on a funded account, but the formula shouldn't change. I'm a strong believer that you need to have a system, a very precise system to decide that is based on the available risk capital, that will help you always have the same risk, even though the lot sizes change, but the lot size change as a function of the available risk capital. The more risk capital you have, the bigger the lot size, but the risk as in percentage terms doesn't change, right? You have to have consistency, because one of the hardest argument for this is that you don't know which trade are going to be winners and loser beforehand. You don't know that. Nobody knows, right? You may know your statistic. Maybe it is 40%, maybe 60%, maybe 80%, maybe whatever it is that your statistics tell you. But your statistics are averages on sample size, on a big number. It doesn't tell you what the next trade is going to be. Like when I enter this, I know I have around 35% chance of my target being hit, right? 35 to 40, depending on the market conditions. But do I really know what the result is of this particular trade? No, I don't. Nobody knows, right? We don't know the future. We only have probabilities. So if you don't know the sequence of the winners and the losers, in other words, you don't know the distribution of the winner of the losers in your future trade results, then why would you apply or allocate more risk to any particular one? You shouldn't, right? Because you don't know which one is going to be the winner, which one is going to be the loser. So you should allocate the same risk to all of them, meaning a percentage of the available risk capital, right? And that's a formula. You can look it up, and maybe I can, while I'm talking to this, I can check if I can find it on the video. I can show you guys. I know it's I'm praising my own bread by talking a video that I made. But I mean, I really think it can help a lot of traders in their journey if they just have their risk management under control. And this is in my opinion, the best way to do this. Let me do this here. I'm gonna check the. Let's see. Where is that? Okay, I got the URL, and I'm gonna post it in the chat. This is the video about risk management, and it will tell you what to use, how much to risk, and how to go about it. And to come back to the question about scaling up is just a byproduct of doing everything else well. Your strategy, your risk management, and your psychology, right? Your execution and your handling losses and things like that. When you're doing all of these right, automatically the profits will come, and with the profits, the scaling up. And the fact that you're handling, or you have a bigger account, or all these byproducts, you have more profits, should not change the inner core, the inner workings of your process, right? So when you're scaling up, you should apply the same mechanism, the same risk strategies that got you to be able to scale up. Okay, that's what I would say. I think it's very important, very, very important. If there's anything you can take away from today, that would be it, right? Just keep on doing the same things. Obviously, that is after you have measured success, right? Positive expectancy of your back testing, and perhaps even your forward testing, and you apply that, and you see results in live trading. You just keep on continuing doing the same thing consistently. That's the key. Consistency, right? And of course, there are things you can do, right? It's not black and white. They're always the same. The process is the same. The mechanism is the same. The formula you use the same. But obviously, you can adjust your risk, whether it's a private account, whether you have it's an evaluation account, whether it's a 100K instead of a 10K, right? So because it means it has different meaning to you. So you might, accept or tolerate a bigger risk, which is fine. And then when you get funded, you lower the risk because you don't want to have that, risk of blowing up being too high, right? So of course you're going to modulate the risk, but you're still in a high risk environment or scenario, as well as where you want to be more conservative. You're applying the same mechanism to mitigate risk or manage the risk, right? All right, good. Let's continue. What else do we have here before we go to GJ? Thank you for your nice words. Thank you for that. I really appreciate that. All right. This question is very, very fundamental, right? How much should you risk on any given trade? And there isn't, and probably you've already heard this, you will see online in YouTube, mentors, courses, friends, whatever, your own thoughts, you will see people say you have to risk 1% or 2% or 0.5%. No, 2% is too much. No, 0.5% is enough. All of these, not to criticize them because, you know, to everyone their opinion, but the size of the percentage or the number, right? The percentage amount that you should risk should depend on your numbers. What is the biggest risk? Why is a high risk bad or good, right? What is the biggest risk out there? I'm going to ask you guys in the chat. What is the biggest risk when you're going to take an account? What is the worst thing that could happen with that account? Anyone? There's a huge delay between when I say something and you actually are able to hear it, up to, you know, a minute, I think 30 seconds. So I have to be patient with your results. But why drawdown? Exactly, Florin, blow up. Exactly. Blow account. Exactly. So when you start thinking of what is the worst case, the worst case is I lose the account. I lose my money completely, all of it, 100%. How do you lose your money on a prop firm account? Let's say you have an evaluation, whether that's 5K, 100K, doesn't matter. How do you lose your account? There are plenty of ways to lose the account, right? Just break any of those hard rules, right? They're there for a reason. They're not to nag you. They're there to help you trade responsibly. But it is hitting your limits, hitting your max loss limit. And if the account has a daily max loss limit, it's hitting the daily max loss limit. So you should think about that before you start putting any trades. How do I make sure that I don't hit my max loss? And that should guide you in choosing that percentage. Now, there are strategies that they are perfectly fine to take a 1% risk on one trade, or even 2%, right? But it depends on the strategy. So how do we know if the strategy to risk 1, 2, or a half? We measure past performance on that strategy, right? Let's say last 6 months, but if you can, a much longer, a year and a half, 2 years, whatever long that period you can make it, the better. And you measure how deep the drawdowns were, okay? And you convert. I know it's a little complicated answer, but this is the best answer. I really think it is. I'm not trying to be, you know, pretend to know it all, but the best way is to change your history, right? Convert it into R, right? So each time you took a loss, it's 1 R. And each time you had a winner, you express it in R multiple. So if you won twice what you risk, that means you won 2 Rs, right? So you do that, you convert every result you had, your P&L, into R, right? So you're going to see -1 plus whatever, minus half or -1 plus whatever. And at the end, you plot your equity curve, you look for your deepest drawdown, and you measure from the highest point before that drawdown how many R multiples that is. Once you have that, you have an idea of how many losses are you supposed to be able to take before you hit those max loss limits or your daily limit loss. If you do that, you have the best chances. Doesn't guarantee that you're never gonna hit your max loss, but by doing this, you are not doing 1% or 2% or 0.5% because arbitrarily because someone said so. No, your data, the data that is actually relevant for this decision, tells you that this is what you have seen in the past. That is your best behavior and performance of your strategy. And that is your best estimation as to what is responsible for you to trade. And that's not even using relative, risk, which is what I also talk about in the in my video. All right. So that's the. It's a little bit long of an answer, but hey, that's it. It looks like this market has switched very, very. I'm actually, when I look at this is convincingly that it has changed direction, and it looks quite likely that I'm going to be stopped out, right? I do see that, I read that in price action, but remember, the instructions I have for my trade plan is not to decide after I take the trade if I need to close it beforehand or not. I've already decided that I'm going to follow a passive trade management. Whatever happens, even if I read it, even if the candles come to me and tell me, Victor, change the plan because I'm going to change, I'm going to go, I don't know, I'm going to go up while you're trying to have me go down. It doesn't matter. I've already decided what I'm going to do, right? So I'm going to accept the loss. Even I see that I could perhaps avoid this loss, right? It sounds counterintuitive. I know. But the numbers tell me that that is the best thing to do. You know why? Because I've seen sometimes, a lot of times, it comes back. And in a great number of those, it still goes to TP. Not saying that that's going to happen this time around. But trades do come back. They do retest the same structures before they actually go to the TP. It does happen. And if you're too scared, if you're too fearful, you're going to miss out on those trades. And I've measured, and, as I said, I'm not going to repeat myself, but in my case, that's the best course of action for me. All right. We have many viewers talking about the. We have Max in the background as well. Would you like to? Are you ready to come in, Max? Just let me know whenever you are, and I'll add you to the screen. Yes, you are. Okay, so let's have Max with us. Max, how are you doing today?
I'm good. How are you?
I'm enjoying our audience. They're very engaging today, asking me all kinds of questions. Max, how do you handle? Going on the same question, how do you handle your position sizing and your risk management? What do you use? Is there anything we can learn from you from the way you do it?
So risk, right? So I actually split my risk because I have different accounts. I have, like, for the funded accounts, I use a different kind of risk. For my personal accounts, where I try to compound, I use a higher risk since I have more room, and I know my edge plays out over a long period of time. And, I tend to hold my winners longer. So on my personal accounts, I tend to risk around 2 to 3% on a very quality setup, right? If I'm not really, it's not really on my trading plan, not my time, but I see a reactive event, I need to take advantage of that. I try to lower my risk during those periods of time.
Okay.
Because the markets are always changing. You like right now, the sentiment, it's more of reactive events going on across the globe, right? It can be headlines from Trump, the tariff headlines, Israel-Iran war tensions going on, ceasefires and stuff like that. So so those kinds of time, I follow different risks based on what account I trade.
Okay, so you base your risk appetite based on the market environment, how volatile, how outside of your strategy, how the market is moving.
Yes, exactly.
Okay. And how do you decide what percentage to risk on any particular trade? Let's say I have this trade that I took, and let's say it's you, right? And you have to decide, okay, how much you have a 100K account. How much would you risk on this? What percentage, and how do you calculate that? Or just the general, right? Just give an idea of how you do it.
Yeah, it's actually a very sensible and logical question, right? When I say I have different risks across different accounts, and that depends on market conditions, people might wonder, how do I know which trade is going to play out and which has a higher probability? Because every trade can be a loss, right? It's not like I'm going to take that trade and it's going to win. It has 100% win rate. But the thing is, you need to understand market conditions, right? So can I share my screen?
Yes, you will. Yes, let me put yours on. Whenever you're ready, I will put it on. These questions are like fundamental, and perhaps people have already decided for themselves how they want to risk and how much they want to risk per trade. But I think this is, you do this every time. It's something you do all the time on every trade. So a minor change in your policy or your strategy, how you position size, will be a huge difference, because you do it every time. It's something like the same things with our habits. You change one small habit that you perform every day, it can change your life because you do it so many times. And it's the same thing with position sizing. It's something that we do, on every trade.
Yep, I think I'm sharing my screen right now.
Yes. Go ahead.
So let me explain market conditions to you, right?
Okay.
So when you look at this entire consolidation, accumulation, whatever you call it, in whatever concept you follow,
yes,
what was the reason which led to this huge accumulation over here?
That's gold.
Yes, that's gold.
Okay.
Let me. Yep.
You want me to answer? Give you an answer?
No, I'm just asking the viewers.
Okay.
Thought I'd be more interactive,
Yes. Do that. No, because you ask a question. I wasn't know if I'm supposed to answer.
You can answer as well. I don't mind.
It of course it depends on how you look at the market, right? How you interpret the market. What is the things that you look at, and that's how you're gonna interpret. Through those lenses, you're gonna interpret. Like, for example, if you ask me that question, since I don't particularly pay attention to fundamental news, although I follow them, I know what's happening, I read them with a lot of interest. They're not part of the trade plan. So if you ask me what's happening there, I'm going to see things through the lens that I use most often, which is, order blocks and quantity. So I'm going to be looking there and see if there are order blocks that tells me why that, range was formed, and what are the order blocks that kept it in that range. It needed some time before it broke it or not. And so it's going to be whatever lenses one uses, and you're going to see reality through those lenses, right?
Yep. So the thing is, I do respect people who are profitable, who trade technicals. I have nothing against them, because I was there when I started, right? But then when I started learning more about how macroeconomics drive these assets, that's when I got a pretty good understanding, to be really honest, right? So if you ask a technical analyst, why is price moving the way it does, he's going to probably say some sort of answer like it's forming a support, doesn't have enough liquidity, there's not enough orders to drive price down. But what is driving price, right? What leads to these price changes over here, where it was so smooth, just the breakout and you have a clean 500 pips to the upside. How do you take advantage on these kinds of setups? How do you know the market is going to consolidate? How do you stay away from these ranges, right? So that's where your fundamentals comes into play. You have to understand what the economy is focusing on, what the market participants are looking at, right? So the whole consolidation over here was because there was no reactive event. All the reactive events on war headlines, Israel striking Iran, Iran retaliating, all those headlines have been priced in. What do I mean by priced in? That's again a very big concept, right? I can't just explain it, but to be very, very simple, pricing it is a concept where these reactive events, these economic events hold weight until a certain period of time, right? Even now, people are trying to buy gold. They're just randomly buying gold when they see a headlines coming out like Israel strikes Iran. I can open the news terminal right now. Okay, I don't see that over here, but if you look at Bloomberg and Reuters terminal, right, you can still see Israel-Iran conflict going on. I can still see headlines saying that Israel is striking Iran. And because of that, people are still trying to buy gold. But you have to understand these headlines are already priced in. Priced in as in the market has already digested it. The big whales have already taken advantage right over here. This was the exact time where the data got released, the headline got released, because it was fresh during that time. It was a major escalation during that time. But once that priced in, once the big whales took their profits, it isn't going to hold any weight anymore in the market, right? So what will hold weight now, right? We need to see new fear headlines. What do I mean by new fear headlines? Is we need to see a major escalation. And what can cause that major escalation would be right now, even if Iran strikes Israel, Israel strikes Iran, it's not going to hold weight in the market. You're not going to buy gold. It's all done. It's all priced in. When will I start buying gold again? Is either if we see rate cut bets, that's another topic. I'm not going to touch that right now. Coming to geopolitical tensions, if we see the US getting involved, right, that is a major escalation. You know, that could lead to a world war, right? So that could bring gold's safe haven appeal again. So that is when I'll be back to buying gold. Once I see a headline saying US is striking Iran, you're going to see the same move over here take place over here. And people are going to be buying, the retail traders are going to start buying over here, but they'll get trapped because the whole move is priced in already. You get what I'm saying?
Yes.
So when you have the data, when you understand these headlines, you gain valuable experience over time. You'd understand where you need to stay away, where volume is going to be dead. See 2 days of consolidation over here. I can guarantee the viewers here that there's going to be a hell lot of traders getting caught in this wicks over here, trying to sell gold over here, trying to buy gold over here, right? But I just stayed away because I knew there's nothing going on. The Feds are taking a slow and steady approach. The economic projections of rate cuts have not changed. So I just stayed away. And today is a bank holiday as well, right? It's the Juneteenth. So looking at volume and volatility, on gold and other asset classes. It's pretty slow. So I'm going to be waiting for more economic data. I'm still on a gold sell. I took a very small scalp yesterday. Which was around this price point. And that was again probably due to Powell stating that he's going to keep the rates steady, right? Yeah, I think that was the reason I took a quick scalp, 80 pip scalp. And right now I'm just chilling. I'm just letting the market do what it does, looking for better price positioning, and staying very alert on headlines, right? If I see US getting involved, if I see US striking, I'm going to load up on those buys on gold. And by the time the retailers start buying, they're going to get trapped.
Yeah.
So I adjust my risk. So coming back to the question and answering the question, I adjust my risk based on the market environment. If the environment is like this, one, I do not trade, right? Two, if I have the urge to trade, if I try to attempt a breakout, I keep my risk low. So when do I increase my risk? Is during these types of moves. I know the fundamentals is with me. I'm playing with the trend and the volume is high. So there's a higher probability of the trade playing out. So this is not applicable just to geopolitical tensions right now. It is also applicable to the US data coming out every week, right? Your labor market data, your retail sales, your jobs data, and all of that. So even
I took a short. I just want to say to the audience, I took a short a minute ago, and you continue. Just I want to, for the record, go ahead.
And if the viewers were watching, I was on my main bias was sells on gold, right? That was mainly due to the ceasefire, anticipating ceasefire talks, trade deals, and stuff like that. And I also mentioned last Friday that I will only be buying gold if I see a headline like this. And that happened over here. And after that, I think on Monday when I joined the stream, after seeing this drop, I did say that we are going to see a pullback sell around this area over here. I think the streams are recorded. You can just go back to the stream, go back to where I was talking, and you can see this price point where I mentioned I'll be looking for the pullback sells. So I think that's how I play my risk, and it has been pretty good so far. Adapting to market conditions, adapting to the real world events. So if there's anything else,
that's awesome. I think yeah, it makes a lot of sense where you say, I don't want to participate unless the fundamentals or the drivers of price change, right? You said where the consolidation to you have an ear on the ground because you know that one of the drivers currently of gold is of this particular asset is safe haven buys, the uncertainty that brings with a military escalation, and as things once they have, the news is out, it's country A and country B are back and forth. There's no change. It's status quo, and you have no reason to get in, and you only are interested when the status quo changes, in either good or bad, or escalation or de-escalation, whether, for example, it's no longer A against B, but it's A and C against B, for example, right? We all know what we're talking about here. And that's a fundamental change in the situation, right? It changes everything. It's a game changer if the US came in and did, or if they strike a deal. That's gonna change things completely. And only then you understand that that's the moment where that hasn't been priced in yet because it just happened. And that's your opportunity to capture on the move that's going to come out of that move, of that event.
Yep.
Perfect. All right. So let's see. Max, what do you think? Do you have any? So you're basically still bullish from what I hear, but you're not going to buy unless something changes completely. Let's say the US gets active in the conflict.
I'm not bullish on gold, to be honest. Even last week, I mentioned when we were sitting around here, I think LJ was on the stream, right? Like,
yes, I remember that. I was.
Yeah. So let me go back. So right from this price point over here, I've been bearish on gold, right? All the way down to over here. And this was when we started getting more of negotiations on the trade deals from Trump, which caused outflows on gold, taking away from its safe haven demand, right? So after that, we've just got a very slow and steady correction to the upside. And last week we were sitting around this price point where I was looking for the sells. I did take 100 pip sell over here, which again instantly got corrected. After which we got the headlines coming out, right? So which I had to adapt to. I'm still bearish on gold, to be honest, until it retests better demand areas.
Okay.
When you look at the higher time frames,
what made you get that bearish bias or expectation on gold for the coming candles, and how long? When you say you're still bearish, do you have any time limit on that?
Yep. So when I say bearish on gold, don't get me wrong, we've seen this huge rally, right? Overall, on the macro, yes, it is bullish, right? But when you look at this area over here, what is gold starting to do on the higher time frames, right? So this was the time I said I started shifting my bias due to the fundamental factors of getting optimism, of getting trade deals from Trump, getting negotiation talks, right? I'm still sticking with that, and I'm only going to be anticipating a new all-time high or even if we come back into the same area, I wouldn't be attempting a buy unless
while we are here waiting, everyone watching us, if you enjoy this stream, the content we provide you, we have traders who are here generously sharing their insights. Not only their insights, but this, for Max to reach this level of understanding his strategy himself and how to handle that, and to showcase you that for your benefit. It took him a lot of, obviously he didn't start off doing it, I'm gonna do it for the audience. He started to do it for himself. But the fact that he's actually willing to share all that, the results and all the learning he had, the lessons he had to be the trader he is today, that is quite nice, quite valuable. And if you see that value, please hit the like button. It's a sincere request hit the like button and subscribe to the channel if you haven't done so yet. Go ahead.
So on the higher time frames, you can see gold has been consolidating. We've been taking, whales have been taking profit from these all-time highs. We are sitting at these all-time high prices right now. And how sensible is it to everyone, like, right? Randomly take a buy on gold at high prices, right? You want to take buys at discounted prices. You want to take buys at sale prices. You wouldn't want to be buying gold at an all-time high without any fundamental catalyst, right? Yes, we do have Israel-Iran tensions going on, but we need to understand that it has been priced in. It's not going to hold weight in the market unless we see new fear coming up. So getting back to what I was iterating, right? I'm going to be only starting to buy gold unless we retest into a higher time frame demand area, can be over here or over here. And at that point of time, we'll have to assess the sentiment, obviously. Or I'd be taking a buy on gold at the breakout of these all-time highs, or even at this price point over here, only if we get major geopolitical tensions, which is new, right? Not Israel striking Iran again, not the missiles going, nothing. That's not going to hold any weight at all after this. So either that or any new war tensions going on in the global economies, or shifting into the monetary policy, the Fed's positioning themselves, the Fed's talking more about rate cuts, right? So right now, when you look at economic projections, I saw someone in the comments say that FOMC yesterday was positive for gold. Actually, FOMC was pretty neutral. It's not actually positive for gold because in the economic projections, nothing changed. And Jerome Powell, the Federal Reserve Chairman, he was talking more about keeping rates steady, right? Keeping rates unchanged. So that still stabilized the dollar, as you can see over here from this demand area. And we are seeing outflows on gold. So to me, to buy gold, I need to see very, very weak US data, as in that can be inflation data, that can be labor market data, very weak as in alarming weak, not slightly weak, very weak as in exceeding minimum economist expectations, right? So that would shift the Fed sentiment completely. That would shift their tone completely. That would start more of the Fed's talking about rate cuts sooner, which would lead to dollar weakening, right? And then us positioning on those gold buys. So to me, I'll still be anticipating gold to slowly come back into higher time frame demand areas before seeing bounces. And I'll only be adapting to this bias if any one of this takes place, if everyone is clear.
Yes, that makes a lot of sense. Max, I'm going to switch very quickly, not to interrupt you. We're going to come back to your what you're explaining, but we have some market movement in the NASDAQ and the indices. We can see that this is the 1 minute time frame. And after the market open, we see a very sharp sell-off in the market. You can perhaps talk about the, since you have, you're much more with your ear on the ground, what do you think is causing this this sell-off? Let's go to gold. How is gold? Gold is reacting bullishly to the U.S. equities open, and EU is also reacting bullishly to, not by a lot, but still it did change direction after that after the open of the market in the US market. Can you perhaps talk a little bit about what is, especially the indices, do you think, why is the market doing this? Is this something that the market hasn't priced in yet? What is the event here? What is the driver of this sell-off, if there is one to be called right now?
When you, I wouldn't really call that a sell-off. I think it's just normal New York Stock Exchange open movement, right? Because when I look at all the other asset classes,
okay,
I don't really see major movement. If we do have anything which is yet to be priced in, we are going to see it more on gold as a safe haven. We're going to see it more on Bitcoin as a risky asset, right? You're going to see it more on the Japanese yen as a safe haven. So when you correlate that, then you could see, okay, this is something related to new headlines coming in, right? So I don't really track NASDAQ, but looking at the equities market, it looks like pretty normal movement to me.
I see. All right. So let's see. Okay, let's come back to what you were saying. Your screen. Where's your screen? You were talking about how the central bank, the Fed in this case, policy and their statement was not exactly was actually neutral for gold, and you're expecting some kind of extreme numbers coming out before you can before it tells you something, before you translate that to what gold could do next. Does everyone, anyone having questions for Max? Now is the moment. We still have about 8 minutes to the end of our stream. If you have any questions for Max, this is the moment. In the meantime, I'm going to go back to the trade that I'm in. And remember, I'm just executing the plan. That's it. I'm executing the plan all the time, right? Regardless of what news comes out, regardless of what my own opinion is of what seems to be happening, I can see this. I can see that the market is holding that nicely, and it's doing possibly something like this. Who knows? But in any case, this swing low is higher than the one before, so it does look bullish. I know. I do see that too. However, I just am trading my plan, and my plan tells me to take another trade, and that's what I will do. And if both of them go to stop loss, I will lose 2 trades, minus 2R, which is 1R, as I was explaining about converting your P&L into R multiples. That will just simply mean 2 trades going, stop loss. 2 risk units would have been lost. And to give you an idea that for our viewers out there, that if I'm right, and probably I may not be right, because we see this market condition and it looks like I'm going to be wrong. If I'm right, I'm going to win 5.6R. That's the total of these 2 trades. And as you can understand, you have to divide it by 2 to get the average of 1R, because that's how you have to. This is one setup, 2 trades, but one setup. So basically, the setup, you have to divide the 5.6 divided by 2. That's 2.8, right? So I get, if I'm right, I get 2.8 times more profit than if I were to lose if I'm wrong. And that's where the advantage is. I don't have to be right, not even 50% of the time, and I can still be very profitable, right? And that's following just a methodical, rule-based system, letting my opinion outside the door, right? I may have my ideas, what this headline that just came out, what this market structure tells me, all of that is fine. But if it's not part of my trade plan, I'm not interested. Even if it's my own opinion, I'm not interested. My trade plan is based on my data. And if my data didn't consult my opinion, then why am I consulting it? Even if it's my own opinion, right? And that's how I trade. And that's how I know to be profitable. That's it. Want to say that just a little bit. We have 5 minutes to the end, and I see someone in the background, a giant of a trader
What's up?
coming in.
What's up, guys?
Hey, Jonathan, is it?
Yeah, it is. What's up, Matthew? How's it going?
Going good. How are you?
I am good, thanks. I'm good. So I figure I'll jump on here and do a little bit of a giveaway.
A little bit of a giveaway.
Yes.
That's an
A little
understatement.
bit of a giveaway, yeah.
We're gonna do an explosive giveaway. We're gonna give away everything. No, I'm just kidding.
No, I was gonna give away a bootcamp account here today for you guys. Let's see if I can share the screen with you all.
Yes.
I've been trading anything. You guys been trading anything during this session?
I have been trading with the audience, and I've gone through with them. I've let them. I guide them through my thought process, how I feel, how I'll manage all these up and downs while the trade is open. Right, something we all have to deal with, and why I do what I do, and etc. I think it's very useful.
Good
But
stuff.
you'll have to ask the audience to let them tell you if it's useful or not.
Oh man, I'm sure it's all good. Yeah, I did have can't really say I do feel more awake, but yeah, I did get some fresh air. You know, that's what like 4 hours of live stream does to you. Is it gets get a little bit tired. I think you know, I'm still in that EUR USD long. I still like what I'm seeing here. It's holding the level quite nicely. Get some orders. Got some new orders in on USD JPY as well, hoping that we're gonna get a continue that breakup move to the upside. All right, let me if I can share my screen here. We can do the
yes,
do the giveaway for you guys here.
The stage is yours, but I shouldn't need to tell you that.
That's all
All
good.
right, guys. I think I'll be leaving right now.
Yeah. Well, thanks for joining, Matthew. Next time I'll make sure to join with you so we can have a conversation, you and I as well. Haven't really been on with you yet.
I think I saw you earlier in the stream today, but I couldn't join earlier. But
I'm always here.
All right. See
Max,
you.
thank you for your insights, and hope to see you soon again.
All right, thank you, man.
Bye bye. Take care. Bye bye.
Appreciate it. Someone asking about the plan. Is there a plan? Is it my plant or your plant? Which one is it? I have a little plant there as well. No one is asking about my little plant. It's about yours, I think.
Probably mine. You really think I know what plant it is? I have no idea what plant that is. It's green. It's green. It's a green plant. That's all I know.
It has leaves.
Green plant. Real plant. Surprisingly, like it's been looking like this for 2 years. It's amazing. Amazing. Yes, I don't even have to take care of it much. It's very
low maintenance relationship you have with that.
Very self. Does it get sunlight? Well, I do have these lights. Like they are very bright. I mean, I can turn them off quite a lot. It's a very bright lights. Look at that. Oof, it's crazy. That's not even full power.
You have like stadium lights there. Ballpark.
Yeah, it's insane. Yeah. All right, you guys ready for a giveaway? Let's do it. Gonna give away a bootcamp account here. Let's go. We got the link in the comment section. If you're not signed up already, well, then can't help you. Let's do the giveaway right now. I'm gonna draw the winners right now. Let's go.
What is the price?
The price is a bootcamp evaluation account. That goes to Moses F. Congratulations, man. Moses F, you win a bootcamp account today. You're gonna get an email to the email that you used when you registered for the giveaway. All right, I think that's a really nice way to wrap this up. It's been really good session today. I think it's been a really good live stream today. I see that Victor is making some money on the EUR USD as well. Beautiful to see. I'm going to be gone next week, but we have a lot of people joining next week. Going to have a really good sessions next week as well. This is unfortunately the last live stream of this week. We'll be back on Monday as always at 8:30 GMT. We'll be doing Monday, Tuesday, Wednesday, and Thursday next week as well. We have some new guests coming on next week as well, so really looking forward to that. All right, Victor, thank you, and thank everyone for joining. And any last words here before we leave?
Last words. No, you are perfectly in time. Oh, no, that's not what I want to say. Thank you, Jonatan, for everything you do for the trading community. I know I'm part of the team. So, and it's it's the team and etc. But I mean, on behalf of every trader out there that wants to become better, you are, doing great leaps and great stuff for them. And I want to, on behalf of them, thank you sincerely.
Thank you. I appreciate that. And thank you everyone for joining. And have a good weekend. If we're not going to see you guys until tomorrow's midsummer, guys. Tomorrow's midsummer. Great, big. It's a big event here in Sweden. It's bigger than Christmas. Bigger than a payout.
Really?
It's midsummer. Okay. That's it. Have a great weekend, everyone, and we will see you on Monday. And as you can see, there's not going to be an outro video because we're working on a new outro video. So it's just going to cut off. So we'll have to say bye-bye here, and we will see you on Monday.
Bye.